you. Thank you. Hello, good afternoon, and welcome to the Plan B show. The budget was as expected on the expected lines. Most of the economists and some brains across the country had been urging the finance minister to surge the demand. And that is exactly what the finance minister focused on this year. Recapitalization of public sector banks, focus on healthcare, infrastructure spends, liberating the insurance sector, focusing on the digitalization of IT returns, increasing excise duty on relevant items to promote internal businesses, to promote the local businesses. Asset Reconstruction Management Committee to address the NPAs. I mean, of course, the banking sector was inundated. I mean, this a lot of people have been calling that banking sector has been inundated with reforms this year. Privatization is expected. It's also expected the divestment target is set at 1.7 lakh crore. We will see whether the target will be achieved. But there are eyes on privatization, like former HDFC chairman Deepak Parekh mentioned that the government needs to play bold this year. And when we say playing bold, the fiscal deficit is pegged at 9.5% of GDP during current fiscal ending March 31st. Now, as many analysts had pointed out, that the government's focus will not be on fiscal deficit this year, and that is exactly what has happened. The government has kept the fiscal worries aside and focused on growth, demand surging, more employment, and more jobs in the hands of people. As a result, more buying spree, and that is what it's a cyclical structure. Now we have a robust panel scheduled throughout the day. We start with GV Anand Bhushan from Shardul Amarchand Mangaldas and Manish Sehgal from Deloitte India. Now, both of you, we were expecting something as far as internet and privacy bill is concerned. I'll start with you, Manish. A lot was expected this year, especially after the Zoom fiasco, the banning of the Chinese apps, and recent WhatsApp controversy. It was expected that the government will come out with its own privacy policy or at least a data regulator setting up. This hasn't happened. So, are you disappointed with the things, with the way budget has shaped up, or were you expecting? Was it on the same lines you were expecting?
Foremost, thank you, Abhinav, for having me here and for allowing me to share my views. I think yes, the expectations were there that there will be some concrete measures which will give a directional push to the regulatory regime on privacy that we all have been waiting for a while now.
Okay.
But the fact that it did not come, I don't think that is should be a disencouragement. I think there were many episodes or many attributes, if you see, that were quite motivating. I mean, the fact that our honorable finance minister went live on a tablet on a digital mode, I think it itself is a big push, which conveys that the wave of digitization is going to continue. I think it's just a matter of time for us to wait. Now, does it happen today, which we were expecting? If it didn't happen today, I'm sure that we have to wait for the right time. But I think directionally we are there, and we still have to get some more concrete views as to how the regime is going to be setting up. So, I mean, that's really my immediate reaction. Expect it if it is not coming, but I think we have to wait for some more time to get it through.
You have to wait for some time. GV Anand Bhushan, do you agree with Manish? Is your view on the similar lines?
Yeah, I mean, it feels like a debate with my co-panelists. That notwithstanding, firstly, thank you for having me, Abhinav. As far as there are 2 points you made here. One was the bill itself, and two was the budgetary allocation for a regulator, if any. So there are actually two separate issues. If you ask me, I'm not surprised that nothing was announced in the budget. There's a lot of nuance with the privacy bill. Is the government planning to truly protect citizens' privacy? Or is this a backdoor entry for, say, data nationalization? Is the privacy bill a guise for data surveillance? There are many nuances, and if time willing, we can discuss that. So am I surprised that it was not part of the budget discussion? Short answer is no. The second example question you asked was even more important, right? What's the use of an act and a bill without a regulator? Now, if you see the draft bill, the bill itself conceptualizes a regulator being set up only 18 to 24-month period. So if you see many other sectoral places like RERA or anything for that example, from the act itself, there's a lag, and from the act being passed, we have another 1.5 to 2 years. So to go to Mr. Manish's point, do we have to wait? Yes. And I suspect it is more in the years as far as the regulator setting up and being funded and being staffed is concerned.
But, gentlemen, MEITY, the Ministry of Information, Electronics and Technology, the critics opine has always been treated like a C grade ministry, not A, not B, but C. Now, eventually, we are getting there from B and from B to A. Now, number one, setting up of a data regulator is not a one-day job. Okay, it requires planning, intricate thought process, matching up to the global standards. There's a lot of planning and hustle bustle. Uh, the fact is that this year alone, because of COVID crisis and because most of the people have started now working from home, so technology has become paramount to whatever we do. Since more people are becoming online, there is more and more data available on the internet which can be utilized in a very, now there's no problem in data being on the internet. The problem is the data getting into wrong hands. I mean, we are a country of people who can give our email IDs, phone numbers for a free coffee. We go to a Chayos outlet or CCD outlet, आपको अगले बार 2 बार की कॉफी फ्री मिलेगी, हम अपने पूरा भाई खाता उसको दे सकते हैं. The data awareness is pretty pathetic. So do you think that some awareness generation could have been there from the government side? And I don't want to put you both in a spot, but this is something which was a genuine demand from the industry. And do you think if not budget allocation, at least the mention of a data regulator could have been made? Manish, we'll start with you.
For sure, Abhinav. So, I think I mentioned, I'll reiterate, any direction coming in the financial budget would have definitely given the impetus for us to talk more. But if it has not come, I don't think that derails totally. But the point that you mentioned, when I think in my previous interviews and discussions, I have iterated many times that if we all believe in the value of data, a regulatory push is going to be great, but we can start disciplining ourselves. We can start controlling our own data. We can be more aware. Right now, the population that we have in India and the way that population is going towards adoption of technology and digitization, there's a big lag. We are getting people to use tablets, but probably without telling them what behind the scene. So I think there has to be a very strong push from our schools, colleges, institutes, skill programs, where this awareness is being built up. Now, I don't think that's a right way of saying that till the time regulator is not there, will not do anything, right? Because I think if we really believe that we have to start protecting the data, we have to start appreciating, somebody else's personal, information. I think that discipline can start. We all can start making aware ourselves. Forget about the people who may not know enough. Even if the people are aware, they might not be practicing. I am aware about people who know that this is not the right thing to do, but still they will do it because they believe that if they say no, nothing's going to happen because there is not much regulatory push given to the scene, right? So I totally concur with the point you made that awareness is must. Making this a big more prominent is must. Had the budget announced it, it would have been great. If not, I think we should still continue in our own capacity and efforts within our enterprise, society at large, mentioning that why is it so important for you to take care of your own data.
Anand, with your smirk, I'm sure you have a different perspective.
No. So you mentioned one point regarding the quality of the regulator, A, B, and C. The MeitY is actually a very sophisticated regulator. Now, if you take fintech as a space, the way they set up and facilitated not just e-wallets, but digital payments with unique identification codes with the UPI payment interface, we are ahead of the first world in that. The fascinating concepts of how UPI and Beam payments have surpassed credit cards is a story in itself. So we just didn't come up with a law. We came up with a good regulator. And most importantly, the government came up with a technological backbone, which is the UPI interface, and gave it away for free. So that is fantastic thought process, execution, and implementation, 10 on 10. Now, where the problem comes is when the policy response itself is confused. And I'll give you a very specific example, cryptocurrency. They announced this the day or a day and a half before the budget. Supreme Court came down very clearly and said it's a constitutional right. It comes under free trade. And then again, the government is trying to bring in legislation that muddies the waters. So here, it is not a lack of sophistication from the regulator. The government policy position itself is unclear. Are you for crypto or are you against? If you are for, is it subject to certain regulations or not? So similarly, if I were to even take the privacy point that you mentioned, the government, it was not an industry demand, nor was it a government demand. So if you ask me why I was smiling a little, the thing is the pressure came as a result directly of a Supreme Court judgment. We started off as an Aadhaar case, ended up as a Supreme Court, and fundamental right to privacy came into the picture. So even the industry is happy to abuse the privacy or utilize the privacy or enable the individual, depending on your perspective. So the impetus has come, and now the government in addition to protecting privacy, is also trying to do data localization and a certain bit of surveillance, all in the privacy bill. And if you ask me, it is this overstretch, confusion, or expansion. Again, depends on the person's perspective. This is the issue that is causing so much delay. This is why it is going to parliamentary committees. That is why there's so many amendments, draft. That's what's extending the cycle, Abhinav.
Yeah, and Anand, to add to the confusion, even the fact that the non-personal data, non-personal data is also being spoken about, right? So I think the contours of what I think Anand was trying to define, that the contours have to be defined, but personal data, non-personal data, I think those are also two very important aspects for us to look. Also, the fact that, Abhinav, I don't think we should look at regulator as outside the bill. I mean, just going back to what Anand said, the bill itself proposed that the regulator has to be established within 18 to 24 months. So I think that all is integrated. And the recent that we heard, which came out in the market, was 89 amendments have been made to the last draft bill. Now, what those 89 amendments are, I think till the time those are made public, it will be difficult to make a comment.
Sure. Now, 1,500 crores of incentives have been announced in this budget for the financial incentive for digital mode of payments. Now, Anand, since you mentioned digital and fintech companies, there are more and more companies who are coming into the ambit of fintech space. And also over the course of time, we have seen very small micro lenders under the garb of fintech players, under the smart garb of micro lenders, loaning out small amounts of money to people. Now, what we are talking about here is money, okay, people's life savings. And of course, this perspective might not be applicable to you two gentlemen over here, or maybe people who come on these panels, but to the larger part of the country. Now, these people do not have that much digital awareness. Do you think that the government's priority at this moment is to first get as many people into the digital foray, and then probably focus on devising or maybe simultaneously working on a data protection plan?
So it's a fantastic question, Abhinav. Very good question. There are two aspects for it, right? Data privacy of that individual, especially if they are from rural areas, if they're uneducated, or let's call it a section of that population. But two, and this is the crucial aspect of it, financial inclusion. Now, if I'm a poor farmer and I'm trying to get access to loan, what is most on my mind? Is it my privacy right or my access to finance? So the short answer to your question is yes. I think utilization for doing microfinancing, micro lending on digital platforms.
Yeah.
Am I audible now?
Yeah, you're audible now.
Are you able to hear me?
What you said for the last 30 seconds. That part.
So the one sentence summary that I was making is, you raised two beautiful competing themes, Abhinav, whether privacy or financial inclusion. So the answer is and. It should always be both, but the government is prioritizing it in a way that they are trying to bring most people, the phrase the government uses banked, we are bringing large portions of unbanked people into the banking system. So whether that is through an NBFC, whether it's through a digital platform, whether it's through an e-wallet, that's a very progressive sign. And this is the key part. When you said it's their life savings, when you talk about digital lending, it's the institutional investors' money that is at risk. It is a great benefit for a previously person who could not be serviced by traditional banking. If they're able to raise finance and loans, it is a very progressive step to enable the population. But absolutely, you're right. The second part is equally important, that while you bring these people into the net, you should have the regulatory framework. It should not be a either or question. It should be an and. And as long as the government even does it on sequence, we're following the right path. And in fact, we're ahead of the world in many aspects as far as the fintech world is concerned.
Yeah.
So, Manish?
Just one more point to add. I think you talked about this happens first or this happen after. I think it has to happen in parallel. We really can't wait for the most appropriate consolidation in terms of getting everybody to the digital world and start happening. As I mentioned, that now everybody has access to smartphones, everybody has access to internet. I think from an infrastructure side, we have done great. But have you been able to educate the people to understand what are their rights when they are going to use it? People sitting in the remotest part of the country may know how to download an application, but they may also understand that I have to use an user ID, but what that means, what that it takes, right? So I think these attempts have to happen in a country of our size and scale to happen in parallel. Digital inclusion, financial applicability, and the fact that the people needs to be digital aware. And to be very frank, let's even put a the topic of privacy aside, are we digitally aware? Do we really understand what happens? Not from a perspective of being technocrats, of knowing everything what happens, but even as a user, I think I have to be digitally aware. So for me, I think that becomes a priority, especially the point that you brought in. And of course, privacy becomes a part and parcel of it. When people are aware, they have to be given rights. And for executing the rights, you need to have regulated. And of course, that comes a part and parcel of the overall bill. I think that's the way I would like to summarize.
Sure. Now, when we talk about bodies like AMFI, and Manish, body of mutual funds, it has an annual budget of 1% to awareness generation, to ask more and more people to come and invest in mutual funds, which is currently less than 2%. If we go to the US, it's more than 80%. Now, the advantage of a body in any sector is that it allocates a specific budget to awareness generation. When it comes to data, more and more people are joining the internet bandwagon. But like both of you rightly agree and say that lack of awareness is one of the prime reasons why we have become vulnerable to data attacks and people falling prey to small cyber threats. Now, do you think that it would be also wise for the government to set up a communication team or maybe a committee which can at least start getting people aware on how data rules work? I mean, government was prompt in telling Facebook that such policies will not work in India when it came to recent WhatsApp inundation. But do you think that the government would be right in setting up a committee for awareness generation, for campaigns, maybe through the media, maybe through its own agents? Do you think it will be wise for them to at least set up a budget? Because we did not find any such budget allocation in this budget as well. Manish?
Sure. So, well, answer is yes. That should definitely be done. But I think it's easier said than done. I mean,
I'll tell you why I'm asking this question to both of you gentlemen. In Denmark recently, there was this problem of lesser children. Okay, so the government encouraged people to create children, and there was a government-sponsored campaign which was a national crisis at that moment. And of course, the government refuses to acknowledge, but lack of data laws is a national problem at this stage. So won't it be wise on the government's end to set up a committee or maybe a communication team which generates awareness as far as data laws are concerned?
Right. So answer is yes, from a perspective that I think it will definitely become a parcel of the regulatory body, whenever it gets established. And I think communication in some other form is happening, right? So I'll take an example of the use of the banking passwords. I think with our respective banks and even from the regulator, there are always some communication messages or some of the other, let's say, email or a vocal-based updates, which encourage people of not to share passwords to anybody, right? The private enterprises are doing in their own capacity, saying that we are a wallet provider, but we never ask you to share your OTPs or other stuff information. So I don't think it's not happening, but I think it has to continue. It has to happen in a much bigger format. But again, going back to the point Abhinav you mentioned, but the policy itself is yet to be formulated. The rights are yet to be announced, right? So I think whatever is being done, there has to continue. May not be in the form of pure privacy, but maybe for the larger digital awareness. And yes, I mean, a committee of a form that you mentioned, which can help to further pass on a message, maybe to the rural areas, maybe to the most remote part of the India, I think that'll be welcoming. If we are aware, and I think if we know how to protect our data, be it the personal data or non-personal data, I think most of the things will be taken care of. We just can't rely on the technology. Technology is a big enabler, but ultimately, what we call human is the weakest link. If we can convert it to be a strongest link, I think that would be the biggest achievement for us.
Sure. Anand?
To avoid repeating it, I completely agree with everything that Manish said. With just one caveat, the awareness curve will always lag the technology. So now I would say we are having the first wave of many people, especially in rural areas, semi-rural areas, tier 2 towns, coming online for the first time. They're dealing with very preliminary issues, password sharing, fake news, forwards. So those are very elementary issues. You have similarly the really first wave of Indian entrepreneurs and Indian high net worth individuals getting onto the cryptocurrency, NBFC, digital lending. It's a whole different world they are operating in. And all of these will be in different curves. And the technology pace is so rapid. By the time we deal with cryptocurrency, you're going to have the drone regulations. By the time you have the drone regulations, 2022 will be the year of augmented and virtual reality. So what I'm saying is your need for holistic approach, especially away from industry, right? Industry will have its own motivations, and rightly so. But the private sector goals will be different from a consumer goal. the citizens' role is best, and these type of awareness, some impetus from the government. Think of it like a cigarette smoke. Cigarette smoking is injurious to health, for example. So if a government, could just spread awareness on basic digital hygiene before theaters, basic communication strategy, will it help? Absolutely, it should be part of the etiquette. But having said that, there is always the curve because technology is improving so fast, and the ways to exploit this, either in direct attacks or just not understanding the risks associated with the technology, that will perpetually be part of the system, and we have to learn how to deal with that in a sophisticated manner.
Anand, I really appreciate your answer, but there is a very subtle dichotomy in what the way you mention. That there should be awareness, but of course there has to be a curve. Now,
Okay.
when we talk about curve, okay, we are not the only ones observing of the curve. Not only is the government, it's also the big tech companies. Now, there are level playing fields across the world. You go to Australia, Australia has fined Facebook, the Australian Commission for Competition has fined Facebook, Google. Same has happened in Europe, same has happened in other parts of the world, the developed economies. Now, when we see the pace of movement when it comes to data laws, where do you think this places the tech companies? I mean, WhatsApp पे जो अभी बीच में शुरू हुआ था कि there was a lot of furor and people migrating to Signal, it was more of a high, what is that mindset you call the sheep mindset, without any awareness, like people said कि हाँ Signal पे चलना है, and after some time it's back to business. But where does it leave the multinational corporations for a market like India? I mean, India is the biggest market for Facebook and Instagram.
Right.
We have maximum WhatsApp users across the world. Now, should we think of the curve at this moment, or should we get into pro rata action and start demanding things when time is due?
So it's a very good question. I'll just make a funny observation and then answer the serious question. In India, we all migrated to Signal.
My bottom line question is, where does it leave the tech companies
Yes,
for a game, for a field like India, which is open?
Yes. So we all migrated to Signal, and none of my friends are using Signal anymore. So that and therein lies the tale, right? Are we sacrificing privacy for feature functionality and ease of use? I want this in the back of your mind when I answer this, because there is some introspection that needs to be done. I'm a big skeptic, because certain people offered extra gigabytes for email storage. We were in the world of 5 MB, 3 MB, and suddenly there's a company that said 1 GB, and we said, see it all. Give me advertising, targeted advertising. I don't care. So the one point I want to make in mind is it's not an us versus them issue. There are much abused phrases that if you are not paying for it, you are the consumer, you are the service. I understand all that, but one question we as consumers have to ask ourselves: how much of this is with our own knowledge, with our own consent, and have we agreed to it? Is that the devil's bargain, the quid pro quo? I leave it up to you. But having come to this important question, what is the government's response to big tech? Are we treating it fairly? If you see the competition, I'm not going to name the big tech companies. As far as the Competition Commission is concerned, they have already passed fines. They have already passed fines and made companies play as far as fair competition is concerned. Point number one. Point number two, if you see about increasing scope of payment gateways, payment wallets, you may disagree or agree with the government approach. I'm not going to take a point, but the government has regulated that space. They've insisted financial data of citizens remain within the country. They've insisted on certain caps. They were fostering competition. Whether I agree with this or not is a different question, but the government has said there are certain caps. So WhatsApp will have certain number of consumers. Paytm will have certain number of consumers. So if you are asking me, is the government giving it a free hand? The answer is no. Whether it is e-commerce, and you've seen the number of regulations from marketplace models to how those marketplaces are staffed with different vendors to enable free competition. So whether it is e-commerce, whether it is payment wallets, whether it is messaging apps, the government has regulated. Now, the question is, how much more regulation do you want? How much more regulation will make it beneficial for the consumer? Because you bring up the Australian example. The last time this issue came up, the large tech company that you mentioned was threatening to pull out its search service from Australia. So it's not
Google still is.
Yes. So it is if you ask me, it will be sometimes it will favor regulators, sometimes it will favor private industry, and there's no right answer. This is another point I just want to leave us with, because technology is changing so fast. Consumers are adapting to it so fast. By the time the law comes up in our parliament, our working group committee passed, things have changed so much. So my one sentence answer to your very, very good question is the regulators are already alert. And I gave you those specific examples. And secondly, right now, I understand Manish's point is we should do everything in parallel. You do everything in parallel is the right answer in an ideal world. Sometimes you don't have that luxury in a country like India. So, we have to be selective in our investments. My answer is in things like fintech and financial inclusion, I would say the focus is most important to make sure we bring more people into the safety net while protecting their privacy. But in things like social network and messaging, the regulators are already alert, and there will be a sea change in approach the minute our privacy bill is enacted, because then you have the regulatory framework, and then it will inculcate and incentivize good behavior automatically. Over to you, Abhinav.
Over to you, Manish.
Well, I think a lot is happening, Abhinav. So if I just go back to what happened today, and few of the sequence of the things that I had made a note of, right? The fact that the budget announcement happened paperless, I think it's a big indicator. Secondly, there was a relaxation which was offered for startups still on a tax holidays, which was again a very promoting part. Third, announcement of the National Research Foundation, right? I think for about 50,000 crores over the next 5 years, which talked about research, innovation, and digitization. And if you continue the fact, which was the last most appealing, was the ease of compliance for customers and businesses. These all have something in common, and that is a digital platform. So going back to what Anand was saying, the digitization in the concept as a whole, I believe, is strongly embedded within our governments and the regulator. It's a point of us to identify what time it happens. Now, does everything mean that a conclusion will happen only when you sanction a company or you issue a regulatory notice, right? Is that the only so-called end of the whole discussion? No, but because those things become prominent in the market space, that is how we begin to get to know. And the fact that even if you go in the global parlance, right, the regulatory body and most spoken privacy law, which is GDPR, it talks about the sanction or the penalties of up to a particular limit. Now, why is it off up to? Is off to is for the fact of that there could be few things that the people are doing right. Because for everything, we just can't go and tell them, hey, this is what your 2% or 5% of their global revenue takes over, right? Another example to give is that over recent past, there were announcements with respect to some potential penalties that would be given to some large aviation industry client. But eventually what you saw happening was a very less portion of that penalty which was announced, right? So I'm just going to give these examples to the point that Anand mentioned and you highlighted, that I think things are happening. Everything is just not about conclusion of getting a penalty in place. And for us, the examples that I gave to you, I think our government is very, very serious about the digitalization. We just have to find the right time and a momentum and maybe a participation within the parliament of getting the bill out and hoping that things will drastically change for us.
Sure. Now, the finance minister did mention that the forthcoming census will be a digital census, adding to what you said, Manish. So you're right. And there is a general consensus that we are moving towards a digitalized economy. I mean, from filing IT returns to having that Arogya Setu app, although I find that app very disgusting, to be honest, between us. Okay. And to even filing of the audits, which today happen. Everything has been digitalized. You're right there. But the general consensus is that the government is a little slow when it comes to moving towards the data privacy. Now, I'll close this last question to both of you. If you are meeting the finance minister today, had you been meeting the finance minister today, what would have been your suggestion to her as far as internet and privacy is concerned and the data laws are concerned? And when do you expect us to have our own data privacy laws? 1 year, 2 year, 3 year, considering the fact that we are moving at a snail's pace, especially when it comes to formation of such laws?
Okay. I think it's a matter of another year when we get to see the bill, because it's already in the third year of its draft discussions and modes. I think a lot has happened, and the fact that COVID gave a big reason for everybody to go to the digital world, I think we are just there. Now, whether that bill gets implemented within a year's time, 2 years, 3 years' time, I think it all depends on what is the final form. Even if you go and take an example of GDPR, it was announced in 2016, but it finally went effective in May 2018. So there was definitely a cool-off implementation time that was given. But within the world of privacy, and I'm with the likes of Anand, I think we are very optimistic that we get to see some version of a bill that will be out for discussion and maybe for implementation as we go forward. And I think had I got a chance, sorry.
Sure. Please continue.
Yeah. Okay. And had I got a chance to meet with the Honorable FM, my suggestion or my request would have been simply the same, that how can we see end of the tunnel with respect to the privacy bill and how the financial ministry can support it. I think that would be my simple request rather than a suggestion. Anand, your thoughts, please.
Anand, closing remarks from you?
Indeed. So the timelines, I completely agree with Manish that that's what is anticipated, because the clock is ticking and there's a lot of pressure to get that closed. The request standpoint would be, for rightly or wrongly, there's a lot of perception that we are adopting regulations tailored to company responses. Certain tax cases, are still continuing, retrospective legislations passed. So the industry request is fair treatment and consistency of that treatment across the board. Legislations or notifications not tailored to specific corporations, not tailored to specific corporate events, because there's no predictability in business and businesses cannot adapt to that trend. So especially when we're dealing with new issues like crypto, dealing with new issues in lending in digital platforms, that consistency of legislation and giving time before announcements and notifications are rushed through, setting up these draft bills, implementing it in acts, and then giving industry time to adjust and enable will create a healthy ecosystem that works for consumer, business, and provide the safe environment that the government is trying to implement.
Safe environment for the consumers, and in this case, digital consumers. So although the budget was a disappointment when it came to internet and privacy laws, which a lot of people were expecting, we do expect something not only from the finance minister, but also the MEETY in the coming days. GV Anand Bhushan, Manish Sehgal, thank you so much for your time. Thank you for joining this panel on the Plan B show. Thank you so much.
Bye-bye. Thank you.
Thank you. Okay, we have Mr. Ashish Vora, Bharat Iyer. Srini has joined. Hi, Srini. Okay, so
hi,
we have
Bharat,
hi. So we have a next power-packed discussion on the BFSI sector. A lot of announcements have been made in the BFSI sector, especially the raising of the FDI limit in the insurance, recapitalization of banks. And Srini and I have a lot of discussions on the recapitalization of banks over the recent days. So I'm sure this will be an interesting panel. We're joined by Bharat Iyer, who's the former MD of JP Morgan Bank, and we have Ashish Vora, who's the Executive Director and Chief Executive Officer of Reliance Nippon. Srinath, over to you and all the best.
Sure, thank you. Welcome, Ashish. Hi, Bharat. I'll just make, I thought we'll keep it very interactive format. I'll just make some opening remarks and come to each of you for your comments, and then we can play it out. While I think the market seems to be on a tizzy, 2,000 points, Sensex already crossed, and I think a lot of people, we can't even use certain unparliamentary words on air, but seems to be having that kind of bodily reaction. Any early reactions, especially about the stock market valuation, because a lot of times we have seen that the economic data, economic numbers, the market realities don't seem to gel with the actual numbers in the stock market. Any reactions, Ashish?
I think I agree with your earlier comment that you can't use unparliamentary stuff on air, etc. But as usual, I think some of these early reactions of the stock market, etc., is basis stuff that people hear or not hear, that we were expecting to see this in the budget. That didn't happen. Oh, so there's a positive reaction. Or that didn't happen, so there's a negative reaction. So my view, we should not have a lot of commentary around the immediate responses of the Sensex, etc. We should allow this to play out for a day, 2 days, when really the sentiment gets understood and the fine print is seen and interpreted. Having said that, I think there is good news on the whole capital expenditure bit. The budget appears to be doing everything that a solid 5-year plan should be wanting to do. And therefore, there is a lot of positivity out there. I'm just commenting on the Sensex reaction. We should give it a couple of days before we say that the market's given it a thumbs up, thumbs down, and all of that.
Sure, thanks. Bharat, to come to you, while everybody, as Ashish rightly mentioned, it's an initial sense of euphoria on the infrastructure and especially the 5-6 year roadmap that's been kind of indicated. But nowhere in the budget did I hear the word that we are front-loading it in the first 1 or 2 quarters. To me, that was a big question mark. It's almost like unsaid. What's your view on that?
So, Srinath, first coming to the market's euphoric reaction, I think, what we have to appreciate is that the market's reaction is for reasons of omission and reasons of commission. because we've had a meaningful sell-off in global equity markets over the last 2 weeks or so. And India actually underperformed that correction, basically because there were fears that you would have a COVID cess, there'd be some tinkering with the capital gains tax, etc. So, as Ashish mentioned, I guess first and foremost, there is an element of relief in what we see in the indices today, because the bad news is not there, and I think the government did well to hold off on these issues which could have dampened sentiment. Secondly, I think what has happened is I think the markets are enthused because you're seeing a few structural things that have been announced here. So, things like, increasing the limit on insurance from the foreign direct investment limit in insurance from 49% to 74%. Talks of a bad bank, though we don't know the contours of it. Talks of privatizing a couple of public sector banks, which could have a whole new meaning to the way the entire pact is being, run, or, talking of privatization. So, I think the right noises have been made in terms of the structural agenda, not necessarily over just the next 1 year, but over the next 3 or 4 years. Lastly, I think coming to the cyclical component itself, you have had some good news there in terms of saying that there's going to be a 30% increase in capital expenditure, things like that. And what we need to appreciate is that globally, assets by and large have rallied over the last 9-10 months on very easy money by all the major central banks, and equities in particular have led this. And I think valuations have got to a certain level where it becomes difficult now to justify higher valuations. I think valuations have kind of peaked, to come to your earlier question. And I guess what markets are now searching for are looking for of signs that earnings will pick up. And in that sense, I guess the markets have got a certain amount of comfort today that the markets went into this event expecting nominal GDP growth in the region of 9-10%. Real GDP growth in the region of 9-10%, nominal GDP in the region of 13-14%. And you had the finance minister, hit those numbers in terms of the growth expectations. So not something very wacko, which makes you doubt the numbers. And at the same time, something which is in line with the market's reams, and you have a reasonably credible roadmap, which is the reason I guess the markets have got enthused. That said, I buy your point. In terms of in terms of front-loading expenditure, etc., which is the reason again, as Ashish mentioned, this is not the time to say thumbs up or thumbs down today. This is the good news being discounted by markets. What you need to see now is a lot of focus on implementation execution.
Sure. Thanks, Bharat. Monish, your opening comments, anything on the, especially where there's been a lot of positive announcements on infra, and how will the markets have been reacting early, very quickly, and what are your views on that?
Thanks a lot, Srinath, for inviting me. And I think that, I echo what Ashish and Bharat have already mentioned. I think early days to really, unravel the budget. But nonetheless, what I think is that one needs to look at a budget that this is, part of a 5-year transformation per se, right? So if you look at it historically, there's a lot of structural reforms which the government has carried out in terms of, the PSU mergers, for example, the capitalization. And in that sense, this furthers the agenda per se, right? So from my perspective, there are about 4 or 5 major items which the government is focusing on. So first is that they want to create capital, right, for financial services sector. So you see that there's a story around recapitalization of banks. Insurance sector, for example, requires foreign capital. It requires that kind of push. And, it's a welcome change to allow FDI to 75% per se. Again, infrastructure financing has been specifically called out. And, if you overlay that with the expenditure plan which the government has, very clearly, government spending is going to spur the economy, and then they're creating the enabling financing structure, which will then, sort of carry the momentum. So first thing I think is that, they want to solve the capital issue. Secondly, I think that, we've seen that in the past as well, that the approach of the government is to create more supply of financial services, right? So if you see that they want to give licenses to new banks, for example, the NUE, for example, again, in this budget also talking about the ARC. So they want to create that kind of a supply side kind of scenario where you have actually specialist institutions who will sort of address some of our structural issues per se. I think the third leg is that, on the governance side of it, right? So you see that there is a cleaning up on the regulation side, which is happening. You are coming up with a common code, for example. You are, paving the path for better investment protection governance. And the fifth part is, the entire enablement, right? So going IPO for LIC, for example, again, going on record to say that, we want to continue with the public sector reforms. 2 of the public sector banks will be taken, public and professionally managed. So I think all in all, if you look at it from a historical perspective, all these are steps in the right direction. I think coming at the back of a very tough year, I guess that everybody's looking possibly for reasons to celebrate. And I guess as Bharat also spoke, right, I think that the key is going to be on how do we implement it, right? So for my Srinath, my perspective, I think we should not really look at it from a quarter to quarter story. I think that this is slightly long term, and it is sort of a step in the right direction as well.
Sure. Thanks, Manish. So just want to play out a statement that the Prime Minister in his address a couple of days ago made. He actually alluded to this upcoming union budget as a series of mini budgets which had started during the COVID lockdown. I mean, that was probably an indication that do not expect big bang reforms. So there was so much of pressure saying 1991, are we going to do a redux 1991? So if we look from that perspective, I think there's a clear indication infra, agriculture, healthcare, very rightfully, they have been indicated. But if I come to specifically, let's say the disinvestment conversation, it looks like the ball has been pushed to Niti Aayog to come back with a list. If I look at almost everything else, say a bad bank, there has been a PowerPoint announcement made, but it has been pushed saying details to come later. If I talk about FDI, we still don't know the interest, the global investors' interest. It's also going to be the fine print of management control, influence, board control, board influence. And the last one more point that I just want to table it is about the recap. 20,000 crore is not a large amount for a promoter entity. I call the Government of India as a promoter entity for owning multiple banks. I mean, there are private banks which have raised more than that amount in 1 year than a government trying to raise that. So why is it becoming a big issue that government gave 20 or proposed 20,000 crore? It's a very, very small number if you own 20 banks. So Ashish, your early views on any of these?
So you're asking a lot of questions in the same breath. Let me give one answer. Let me begin by giving one answer called the FDI. Let me begin for a moment to say that the FDI expectation has been on the cards for at least a couple of years, and the industry has been asking, and I'm specifically referring to insurance. And there has been a logic as to why the industry has been asking. One logic is that banking and mutual funds are permitted, so insurance should be. But let me come from the demand side. Insurance is a long-term product. It is also a capital-intensive product. I mean, if you set up a branch, it is going to break even at a minimum of 10 years. And therefore, it needs capital. It needs what we call patient capital. And I could argue that domestic capital is not patient capital. You need insurance-specific capital that is patient because the global players understand the life cycle, and therefore there is a little more patience available there. The third aspect is availability of domestic capital. And the events of the last couple of years, etc., has clearly shown that not only is patience led, but capital availability itself in long gestation projects has been of a constrained order. Now you look at the facts on the ground over the last 10 years, and that's because of partly the way the ULIP regulations went, partly the way constraints on expenses, etc., came in. But there has been a shrinkage of branches. 2,500 insurance branches, life insurance branches have reduced from 2009 to 2019. Now that's a lot. And one would argue that if we have to compete as a country with Asian peers, economies much smaller than ours, per capita incomes not so different from ours, the insurance penetration, both on the life side and the general side, has to be of a significantly higher order. On the life insurance side, we are still sub 3%. We are some 2.74% of life insurance penetration, and capital is required to be able to get down to enhance infrastructure, to enhance branches, to be able to write newer products with more capital strain, to be able to deliver more value to the customer, and therefore enhance insurance penetration. Now you look at what's happened during the pandemic, and we've become painfully aware that the insurance penetration has been of a lesser order, and we are all sitting and sanctioning insurance claims, life insurance claims to COVID, COVID deaths, and the percentage is minuscule. In my view, not more than 5 to 7% of total COVID deaths are going to get one or more claims. So one could say 90% are not getting it. So you look at the situation for a country our size, or an economy our size, this can't be the level of insurance penetration.
Correct.
So therefore, if you put these 3-4 facts together, I think the move is a very welcome move. And I do believe there is determination behind the move. I don't think there would be fine print or the Indian control piece or the independent director piece that's gonna waylay any of this intent, because the intent, I think, is genuine. The intent is something the industry asked. We did dialogue with the regulator, with the government, etc. And I do think there is a genuine intent of getting life insurance and general insurance penetration to reasonable levels, significantly enhanced levels from today. And the FDI move definitely secures our position. It's just the first step. We have to see the implementation details. And just my personal view is that I don't think there is a stumbling block there, or there is no roadblock there, or there is no fine print that I think is going to waylay us.
But did you expect something that did not come?
Well, on the insurance side, we did expect some relief on GST. GST continues to be there on life insurance products. We did expect that some of it would probably be given as relief, because that's yet another way of pushing protection in the industry, isn't it? End of the day, we have so many conversations with consumers, etc., and the price of insurance is a matter of consideration. And we are a mass market country, let's face it. There are only so many people at the top of the pyramid, and there is a large segmentation in the middle, and pricing matters. And we could have given some relief on the GST side. Although I must say, insurance is one of the cheapest in India. If you compare across the world, the cost of insurance is not high. But then again, incomes are not high either. Per capita incomes in India are of a particularly, modest order. So a GST relief would have been very welcome. It could have given a much higher fillip to the industry and moved, the consumer sentiment along. End of the day, it's a consumer sentiment.
Thank you. Moving on to Bharat, your views. FDI, disinvestment, bad banks, any of those. And of course, just to add on to what Ashish said, there was also a huge, expectation, consumer group expectation that this budget would increase the exemption limits or the deduction limits for insurance premium payment. There's a huge expectation on that, and affordable housing, the interest component. These were the consumer group expectations.
Well, Srinath, I guess, politics is the art of the possible. And what we need to appreciate is that, there are limited means here, particularly because, the government didn't tinker with taxes on either personal income or on capital gains or on corporate taxes. So, that was a binding constraint. I don't think they wanted to mess around with that. So that obviously meant that, the stimulus to be provided to the consumer would be limited, because they don't have the means at this point in time. And they provided, to be fair to them, they provided a fair bit in the last 2 years. And again, we have to understand where they are in the political cycle. This is like, bang on the third budget of this particular term, and they'll have 2 more to go. So, even if they wanted to provide a consumption-based stimulus, from a political calendar point of view, this would not be the appropriate time to do it. It would be more appropriate to do it in, the subsequent budgets, which would be nearer to the national elections and as the political calendar picks up. So, I'm not surprised really that, not too much stimulus was provided to the consumer, either by way of, tinkering around with tax rates or by reducing, indirect taxes on consumption-related products. Obviously, the big focus now, as far as they are concerned, is on job creation, and which is the reason I think they've chosen to, bunch their bullets up in the capex space, and which is the reason, you've seen a very generous increase there in terms of 30% outlay on capex. Because the aim is really, get capex going, get job creation going, and we'll worry about the consumption stimulus later. So that's another point. The other point also to note, Srinath, is that, what we need to appreciate is that, while the equity markets have been euphoric about the budget, the bond markets have actually sold off meaningfully. Yield on the benchmark 10-year bond is actually down 10 to 15 basis points. I don't know what the latest is. And the bond market is very clearly concerned that, look, you may not have the resources eventually to spend. And as it is, the borrowing program that has been outlined seems a little hefty as far as the bond market is concerned. And if there is any disappointment, either in terms of growth, because at the end of the day, you have budgeted a meaningful growth number, both in real and nominal terms. There is the divestment target, which year after year we keep missing. And also, as you rightly pointed out, maybe 20,000 crores is going to be a very limited number to recapitalize the banks once the actual data comes out and the moratorium issues are settled. So I guess the bond markets are rightly concerned that revenues may not keep pace, and what happens then if expenditure has to be maintained, and which is the reason they're selling off. So it's going to be early days. I mean, one can't take a very one-sided view at this point in time. I guess a lot will have to happen through the year, and the focus will have to be on execution to ensure that at least 75 to 80% of what was spread out today is executed and implemented, and we get the benefits of those.
Sure, and again, one of the other point that the budget mentioned was that government is going to be in the debt markets to borrow 80,000 crores in the next 2 months, and this is a crucial time as just when sentiments come back. Do you see corporates getting nudged out of that space?
See, it is. I mean, my views on interest rates is that we've seen the bottom for a long time to come. I mean, what we saw in December, January was absolutely the bottom. I think here onwards, rates, particularly market rates, I think typically these days, I mean, lead policy rates, and we've seen that in all parts of the world, and India is no exception. We have a very smart bond market out here, and I think rates have definitely bottomed out, and rates are going to go up for one or both reasons. I mean, inflation is still sticky. I mean, we're still meaningfully above 4%. And if growth revives, then the demand for money is going out. And as you rightly pointed out, the government is going to crowd out the private sector for large parts of the year, the next 2 months, because of this additional 80,000. And let's face it, 12 lakh crores plus next year gross is a very demanding number, particularly if you don't get divestments going and growth doesn't pick up early, and if the growth recovery is back-ended. So yes, I mean, the smart corporates would be one who would load up as quickly as they can. Because as we keep going over the next 12 to 14 months, the interest rate environment could get more challenging for them.
Okay, thanks. Munish, what's your view on this?
Yeah, so I think that, to your point on the capital, yes, 20,000 crores seems to be a small amount from a public sector bank recapitalization perspective. But I think that, it's important to understand that one should look at this as sort of, seed capital, right? So you could look at solvency capital, which obviously some of the banks would require, and then actually growth capital as well, right? Where some of the other banks would require. So I think that's one way to look at it. I also think that government is very, very clear to say that they're looking at other sources of capital as well. So they are going to do the seed capital for public sector banks. They're going to do seed capital for the infra finance company. They're going to do seed capital for the the bond institutional company which they're talking about. But they also want to go IPO, right? So LIC IPO for banks, that is going to raise domestic capital, and then obviously inviting foreign capital as well through insurance, but which will eventually come back to our financial market. So I think that's the way to look at capital. I think broadly what one should see is that this is increasing India's competitiveness globally, right? So we have to look at how well we are going to do with respect to the rest of the world, right? So historically, India has always grown at more or less 5% higher than the global GDP. Now is the time in the next 2 years or so where we can really break away from the pack, right? So looks like the indication is that, at least the initial numbers are that we might actually gallop ahead of the rest of the world. And if we do some of the structural things right, it could actually give us, a huge momentum eventually to reach the 5 trillion economy, which has been the vision of the government.
Thank you. And if you were wearing the lens of a foreign investor, it's a very unfair question, because at the end I'll come to Ashish on this. What would make a LIC IPO an attractive proposition?
See, I believe that the growth, the volumes are there in India, right? And I take Ashish's point around the price points, but at the same time, profits are there as well. And LIC in particular, has been one public sector unit which has, truly stood the test of time, withstood the market pressure, still is the market leader, and so on and so forth. Having said that, I think that, one should look at the broader insurance story, huge amount of under penetration, and hence the upside is actually quite high. So for any international insurers who's looking for growth, India is a huge market for them to ignore. And if they don't have a significant presence here, I think that they would compromise on growth, and which is well broadly true for Asia Pacific, but particularly true for India, given where we are.
Okay, and do you think the bad bank contour is going to change, let's say, the level of banking competitiveness? Because at the end of the day, we not only need a clean banking system, we also need a competitive banking system, and that's something that we have not spoken at all.
See, I think that it will benefit in two very distinct ways, right? So one is that a specialized institution is going to come up with a certain amount of structure which optimizes and looks at, and I look at it as a sort of an industry utility, right? In that sense that it's a common industry problem. How do you create an institution which will sort of solve for these issues across the industries, across banks? Second is that this sector is something which does require, special skills as well, right? So in that sense, let the banks focus on growth and business as usual, and let this, issue be tackled by a specialist agency, which will take whatever it takes to, this is part of the growing up pains as well, right? So there is a legacy, and there is the post-COVID situation. It has to be dealt with, and it's best dealt with by taking a specialized approach.
Okay, thank you. Bharat, what's your view on the LIC IPO?
Well, I guess, there should be takers for it, Srinath, because I think, valuations is a different ballgame altogether. And perhaps Ashish can comment more in terms of the relative valuation, the organization could command. But I think two things stand out as far as LIC is concerned. One is, obviously the size, the market share, and the penetration and the reach. I think it's clearly, unrivaled. And the second issue is also, despite the onslaught of the private sector in this space, they have managed to hold their own. A lot of businesses, what we have seen is, the private sector moves in and the public sector completely gets marginalized. Whereas I think LIC is, always it's been a very market-driven organization. And I guess, we all see, we're all customers of LIC in some point, because most of us started taking the insurance product when the private sector was perhaps not around. And we've always seen them to be quite market savvy and market friendly. And I'm at least enthused by the way they've held on to their market share in reasonable terms. It's not been a clean sweep from the private sector. So given that, I guess, of course, you still need to make some changes in the way the organization is run. And, foreign investors will rightly ask questions about, management control, and about things like, is it going to be the last repository in the case of the government's divestment target? Things like that. There are a lot of questions that will be asked, and I hope, they're preparing themselves adequately to answer them. But if they can give a meaningful answer to some of these sticky questions, I guess overall there should be appeal for LIC.
Okay, I'll come back to you in a minute. Ashish, I know LIC is a leader and a competitor in the space that you operate in. So with the sensitivities around it, whatever you can actually share as your view, would appreciate that.
Okay, so I think there are 2 points to make. The news around the IPO of LIC, etc., is of course, and there has been talk around unlocking value in that area. I think a whole lot of that will depend upon how, some of this aspect around corporatization of LIC is going to play out. What kind of structures will happen? What kind of, execution focus is going to come in? There are several of those areas. If they are spelled out better, I think it'll mean, it might give a lot of confidence to say as to how will the future pan out. There are other areas around how the PAR book is structured, etc., in the whole LIC space. Some of those questions also, if they get answered, it'll pave the way a lot for value creation. And I completely agree with the previous comments that LIC is a hugely successful organization, and with the onslaught of private, still a 50% of premiums in a very, very large market. So, there is a large amount of value that sits there, but some of these answers could help pave the way for execution a little better. Your other question really is around how will other foreign players think of the Indian market? And if you look around the world, if you look around parts of Asia or even parts of Europe, etc., there isn't so much of vacant space available. Most of Europe is already sitting on significantly higher levels of penetration, etc. And it's very hard for new organizations to enter and create value. Now that leaves basically Asia, where penetrations are of a lesser order, or the developing countries, so to speak. And then when you talk of Asia, there is China and there is India. And pretty much if you skin the market, you find that these two are really 60 or 70% of available potential in the Asian market, merely because of size as well as level of penetration. That's the momentum you get. And it's no brainer to say between India and China, India is a better market to be able to compete and penetrate in. It's at the end of it, it's got a transparent set of laws, a transparent set of competitive environment that is created, etc., which is not so in several other parts of Asia. Therefore, for a meaningful player, India holds a lot of potential. The demographics, the level of penetration, transparency of laws, available of English-speaking manpower, available of educated manpower to be able to execute. So back to my previous point, patient capital and good long-term vision coupled with demographics, I think is a massively good potential. So now each foreign player would think about it differently. It depends upon what their domestic position is, how competitive is the domestic market, what is the available opportunity in the domestic market. So several American players still have a significant amount of potential available in America because they are established and penetrated that. Therefore, their ability to go that incremental 1% market share is still possible. However, several other players don't quite see the domestic market with as much potential. Either there is a demographic challenge, or there is an aging population challenge, or there is a penetration that is already peaked. Now, a combination of domestic market, combination of overall international strategy makes India a very, very high potential place for more foreign capital to come in. I'll qualify that statement to say that I don't think there are going to be 20 players who are going to conclude exactly like this. But I do think there are going to be 5 or 6 players who will take exactly the view I'm taking. And therefore, you would see increase in capital inflow into India.
That's I think a very encouraging statement from a large player in the space. And with the announcement of all the infra projects that the government has made, one of the avenues it will look forward for funding is the insurance companies, the pension funds, and all that. So if you were to wear the investor hat, what's encouraging for you? I mean, have you seen successful execution, speedy implementation in the last couple of years that is going to encourage you? Or is it going to be transparency of information that is available for you as an investor that is going to encourage you? What is the encouragement point for you to say that, let me go out and invest in central government or state government papers?
You're asking me?
Yeah, I'm asking you, Ashish, sorry.
Yes. I guess all of the above. We do have, each of our companies have a very transparent and a committee-driven way of establishing where we would invest. Remember, we, at the end of the day, are managing public money. And we have to balance between risk, predictability of returns, as well as a little bit of a branding, because information is now available to the public on almost a daily basis in several of our funds. And therefore, all of the three make a lot of difference as to where we would be investing and how we would be choosing. So we do follow a elaborate process of evaluating, each of these papers. And we take a call. There is almost a regular mechanism that we have of being able to, make our choices. Short answer, if we would need confidence on execution risk being minimal in several of the projects that are being discussed. We would look for a very good management around it. We would look for confidence to say that the timelines that are being laid out will get adhered to and therefore executed. I guess those are the factors we would look for.
Okay, so if I were to draw, so let me go to Monish to ask this question. The same confidence or positivity that Ashish sees with the government projects, do you think it is going to be applicable even to the concept of bad banks? Because one of the biggest opposition for bad banks has been this. There have been two kinds of fears that the market has had. One is if the banks are coming together and creating a bad bank, structurally, what will be the governance and what will be the competencies? The fear is they don't want retired bankers or the same bankers who sold those loans to go and run those entities, the bad bank. That's one. That's a very, very big fear, considering we have had these instances in the past. And the second one is to say that at what pricing a bad bank typically functions well, and if it is efficient with market pricing and not necessarily at the book value pricing. What do you think? What are your expectations?
So I think that for a bad bank to be successful, if you look at it at a full picture, then the loan's already gone bad, right? So it's a question about if you look at it from an end-to-end perspective, how well you're going to manage it to realize the value. And more often than not, most of the Indian bad asset managers focus on recoveries. They don't really focus on turnarounds. So creating a focused, professionally managed asset management company, right? And those are the words actually which sort of shine out in the budget statement as well, that they want to create a bad bank and a professionally managed bad bank. So and there are there is a lot of talent available in the private sector as well, and government has done actually very well to attract very great talent in a lot of public sector enterprises. So the way I look at this is that the whole issue of creating new institutions, it will be professionally managed per se. And from a business model perspective, we will see models which focus more on turnaround and creating value more than actually asset stripping. So those players will be more successful, right? So asset stripping is what most of the ARCs do at this point in time. But the moment you have those specialists and access to capital, we will see the other story, which will then really create value for the economy. And mind you that the business failures, insolvencies are in a way helping the economy restructure as well. It's only that how well you manage it, right? So we've had more than our fair share, but hopefully the growth will outweigh the challenges which this insolvencies will sort of throw at us. I think if you find out, just would want to respond on the question around the investments in public sector enterprises. And I personally think that going IPO, disinvestment is not just going to unlock some of these values, but actually unleash some of the values as well. And we may actually very well have a situation where 25% of a PSE is more valuable than 80% of PSE which the government is owning at some point in time, right? So you will really see, and probably the government will look at it as a portfolio of companies which they have at this point in time. The right strategy would be to probably low price a few of them, generate that investor interest, build the confidence by giving those returns, and that's what will it's a large disinvestment target as well, right? But I think that it's a step in the right direction.
Sure. I mean, just to provoke Bharat on that point about disinvestment, I mean, it's far easier to start a company in India than to close it. It's applicable to private investors as well as the government. The government has its equal challenge and layers of addressable to the parliament, the CVC, the other agencies. So in a scenario like this, where the valuations could be depressed in certain sectors and they've showcased the intent to get out of them. I mean, in short, what we didn't hear, but what they have meant is very clear. The government won't have business running certain businesses or most businesses. I mean, there are challenges and constraints in finding the right value, and also the timing. There have been times like Air India, I know, has been around on the block for 20 years. I mean, we might argue that it's a national asset. We might go back in history, but so is every single CPSE or unit that has been formed. So what do you think are the operational challenges that you anticipate on the ground?
See, Srinath, I think, we've been talking about, divestment, slow privatization for, I think, more than 20, 25 years. I remember at one point in time, HPCL was on the block in the early 2000s, nearly 20 years back. And so, this is a theme that keeps coming up every now and then. And for some reason, we've never managed to, be successful in it. See, I don't think anyone is really going to, apart from, an extremely die-hard leftist union leader, I don't think anyone is going to really argue against, privatization, particularly in, non-strategic areas. I think, that's a given. I guess what the government needs to grapple with is, you have to understand that, there cannot be a one-size-fits-all policy as far as privatization is concerned. Each entity is going to be very, very unique. Be it in Air India, I guess, the problems there that you're going to cope with there is going to be very different from, the problems in the case of an oil company like a BPCL, or, if you look at something like an engineering company like a BEML, they're all going to bring about its own challenges. So what I would really like to see is, if you can actually set up a small unit called, call it for namesake, a Department of Privatization. And what you do is, you give them a mandate every year saying that, look, these are half a dozen units which we want you to take to market. And, your whole job for all of that year is valuing those companies, liaising with, potential, buyers, educating them on the real value of that entity, and, also taking care of the constraints that prevent you from privatizing and getting it going. And if you were to start that process in year one, if you take over 6 units, and even if you do 2 or 3 units, I think it would be very successful because it would get the ball rolling. There's no point, in having putting out a shopping list saying that, look, these are 30, 40, 50 companies that, we don't think we want to be in and which we want to sell. And, they're all under respective ministries. The skill sets are not there. The competencies are not there. The vested interests will continue to play a role. This is not going to take us anywhere. And, we'll just be repeating this as we've been repeating it in the past. I would actually like to see a very, very focused approach to this particular area. And I think if they do that, then I think there is scope for success.
So AUM sold within 12 months, would that be a measure, a KPI?
Not necessarily. As I said, look, let's look at the year that's just going by, fiscal 21. We had a budget of 2 lakh crores. I don't even think we've got to 10-15% of it so far. LIC was supposed to have an IPO this year. Air India was supposed to go. There were enough press statements to that effect, and nothing has gone. But everyone understands that. Look, nobody's really going to hold you to task for on a yearly basis. These are multi-year processes, and which will take time given the kind of legacy that we've had. But you've got to show progress, and that is why, as I said, I don't want to see the government spreading itself thin. Putting out a list of 50 companies and saying we're going to get out of all of them, and then either you don't unleash the real value, you sell it at the wrong price, or you sell it on the wrong terms, or some vested interest gets in the way. That would be inappropriate. Even if you can make the first 2-3 will be difficult. Trust me on that. But if you do that well, then they become very good case studies for the others to follow. So it's a question of building momentum. Things will snowball in the right way, and I mean that in the right manner. But you need to have a very focused approach to this.
Sure. So I want to go on to Ashish to ask you about the DFI that they propose to set up. Forgetting the regulation and the structure of DFI, the intent is very simple. Bring in monies which will actually invest into long-term gestation projects, which will help move the needle in terms of infrastructure. And that's almost similar to the insurance and the pension thesis. You have long-term money structurally available for you 15, 20 years. And do you anticipate any kind of, let's say, convergence or competition from similar constructs there? Insurance versus DFI?
No competition. I don't think there is any competition there. And you're absolutely right. The construct is very similar. Long gestation, patient capital, industry specialization, almost expertise being sought to say, how do you deal with some of these specialized sectors which need nuances, which need speciality thinking, and therefore cannot be generally seen as generic investment. I must also say that demand of this would be huge. The supply is short. Clearly, there is short supply of that. So a part of this will have to be environment creation. A part of this would have to be, confidence boosting for some of this investment to come in. And personally, I would see that as very similar to the FDI story, and say one would hope that it pans out well.
Sure. Just to, take that argument ahead, structurally, the banks, even today, when they do wholesale lending or project lending, I've always, if you look at the last 20, 30 years of the behavior, I've always given out an average of about 7 years of loan. And they've gone back to the table and again renewed that same loan. When you know very well that you could have issued a 10 or 12-year loan. And it could have been addressed much easier rather than just simply put together a DFI with all the fanfare. What do you think?
I think there are multiple pressures at play here. There is a way in which the banking sector runs. There is a way in which tenure matching is done. There is a way in which the asset and liability plays out. So I would think there are some constraints to be able to, put it this way. I would say there are project financing institutions which is able to take as long-term a view that you're putting out, but I guess that's not adequate. It is not sufficient, and therefore, some of this specialized capital makes more sense.
Thank you. Monish, what are your views on DFI?
So I think that infrastructure financing has been sort of identified as one of the key focus areas, and infrastructure itself is one of the key bottleneck as well, right? So it will have a huge multiplier to solve this issue per se, and the budget actually addresses that in three ways, right? So it is first saying that we want to set up the DFI. While they've set aside 20,000 crore, but the aspiration is that this will sort of create funding for about 5 lakh crores or so. So that's the kind of leverage that they're talking about. Secondly, that they actually spoken a fair bit about on monetization of assets, right? So and they've given actually a specific long list of monetization which is being planned as well, right? So in terms of railways, for example, in terms of highways, for example, in terms of coming up with InvITs and REIT structures and so on and so forth. So I think that is also going to generate some sort of a capitalization, and I think more than capitalization, it will actually unlock the non-economic assets which some of these projects would have, and sort of result in some sort of self-financing. And the third bit is that it has actually earmarked a slightly higher proportion for both central and state government expenditures as well, right, to fund it. So very clearly, I mean, infrastructure always gets a huge mention in all our budgets. This budget is no different, but I think that all these things put together actually augurs that we are working towards creating sort of a long-term market for financing infrastructure projects.
So this is the point here. Do you think this is attractive for getting in foreign investors, especially debt investors, because this DFI is going to go out and raise money, and the space for the government? One of the worry that always around is the international rating agencies, and how do you think they would look at this?
No, I think it goes back to the relative ranking of India vis-a-vis some of the other opportunities which are available there, and I think that and Ashish spoke about that as well, that we have a lot of things going for India, right, in terms of the growth is here, the volumes are here, the demographics is here. It is in all fairness a very large market with a reasonably stable environment, right? So we would see this itself work out to act to attract a lot of investments as well. So I think that probably it will be great the government has gone on record to say that, and it's part of the budget as well, right, that they want minimum government and maximum governance, right? So I guess that the key would be that how you managing those infrastructure projects, delivering on time, which will reduce the construction risk per se, right? So that's a risk which most of the foreign investors actually are wary about in India, and if you are able to manage that risk, I think that the rest of the commercial risk is obviously worth taking.
Thank you. Bharat, your views on DFI?
See, Srinath, I think as far as DFI is concerned, the proof of the pudding is, if you're going to ask me, is going to be in the eating. Because let's face it, it's not that DFI is a new concept. We had 4 DFIs if I go back to the early 90s. And all of them had a torrid time, right? I mean, and 2 of them still are in a very challenging situation. One has gone on to become a very successful bank after that. So it's not that we've not had DFIs in the past. We've had DFIs in the past. But I guess, what you need to do really is, you need to build skill sets, you need to build processes, and, you need to ensure that these are executed and implemented well for this to be successful. Because otherwise, we just repeat the mistakes of the past. I mean, we've gone through one cycle with 4 DFIs, and then, they all, did what they had to do, and then we'll again create another one and another one. The other thing also is, coming to it from a capital point of view. Let's face it, there are going to be limitations in this new world for the government to be able to, fund a DFI completely like they did in the past. So, I think a DFI makes sense in terms of, being a nodal agency, particularly if it comes in with the right skill sets. And if this DFI starts getting respected in the marketplace, then I think it's going to be a big positive, because what happens is, once they put their stamp of approval on a particular project, because a lot of projects today, they may be up for sale or they want money. But they find it difficult to attract capital because there's no one willing to stamp the particular project and say that, look, this is kosher, this is good. Whereas if you have a DFI which builds that kind of confidence in the marketplace and takes on the role of not being, someone who's going to fund the whole thing, because I don't think the government is going to have the capacity to, put in place all the capital for one DFI to take care of all the infra needs. But if they can build credibility in the marketplace, and again, this is going to be a gradual process, it will become very easy for a lot of institutions, particularly overseas. You're talking of sovereign wealth funds, you're talking of a lot of funds who'd like to come and participate in the India story, who'd like to participate in the India infrastructure story, and they'd like somebody very credible to, give a stamp of approval. And if this DFI can, be the nodal agency which can do that, then I think it's going to work. But if the DFI is going to be tasked with carrying the entire capital burden of reviving the infrastructure in India, then I guess looks difficult.
So that it brings me to an interesting question on talent. I mean, when you spoke about DFI, Bharat, 20 years ago or 30 years ago, the average stint that somebody did in a finance company was probably a lifelong job. And today, when you have an average person moving every 2 years, how do you build capability, talent, and how do you hold them responsible for something that take a credit decision and they've gone, and the investment has been made for 10 years?
You have two things. I guess, one, you still have people who, work in an organization for an extended period of time. If, they're given the freedom to, execute what, the job mandates. And if there's no interference from various levels. I mean, I worked in my last assignment for 15 years, and I know of so many people who worked in the State Bank of India, for example, for, a lifetime. And even though they've got the best of offers, they've not gone out because, they respect the organization and they enjoy working there. Never mind money, etc. So, that's one thing that, again, it's going to be the mandate of the organization and how it is managed. And it will really help if you have, a very strong leadership to start with, at least over the first 5-10 years, because that leadership is going to be very key to attracting talent and retaining it. And let's also face it, building a reputation is not going to happen overnight. It's going to take time. It's going to take 3 to 5 years to just get the ball rolling, and then, you build on it. So I guess, in the case of just not this, but a lot of the initiatives that were announced today, I guess they're very positive initiatives, but we need to give the government time to execute. It's not going to happen in a hurry.
Okay. And your views on disinvestment of the PSU banks, and there's a lot of speculation, Twitter chatter saying what are the two names. What would be your guess if I had to push you to the wall?
Yeah, difficult to take names. I mean, and not fair. But what I would like to see is I don't take some of the bigger names. Because there's too much at stake out there. Take something which is medium-sized, which has a compact footprint. Okay, be it in terms of geography, be it in terms of industry subsets, etc. I think if you take an entity which is mid-sized, which operates out of a compact footprint, both in terms of geography and in terms of industry subset, that would be a very good starting point. Because you don't want any number of interests to come and take over the process and waylay it. You want easy wins to start with, and if you can get that going, and never mind, it doesn't have to happen in a year. Even if it happens in 2 years, I think it will be very good. But yeah, I mean, don't bite off more than you can chew. That would be my bit to it.
Sure. So Monish, going on to you about disinvestment of the PSU banks and as well as the general insurance company, the PSU General Insurance that's been alluded to. Any expectation or any word of caution? Because again, just like in disinvestment that we announce for various sectors, this is also one of it. And in some of the conversations that we have seen the last 1 year, especially during COVID, the way that the RBI has solved some of the banking challenges has not had a fixed formula. Each case needed a different kind of solution. And in this case, especially with two PSU banks, where the government being the stakeholder and RBI could have a different view, especially if they are in PCA. How do you think this is going to play out?
So I think that this is part of the broader structural reform. So we had a bunch of PSUs getting merged. So I mean, a safe assumption that some of the larger ones which did not get merged up, possibly the banks which have been identified to go the public way, and that's probably the platform for their reform, right? So merger was one way to sort of solve the reform issue for them, and for a few of the others, you have raising money. I think the crucial bit is that how do these banks go about restructuring themselves, right? So I mean, they have a tremendous amount of, and this is for PSUs in general, a tremendous amount of brand equity and trust in the market, and something which is, very, very valued by customers, beyond tier 1 centers, right? So India's story is going to be retail story in a very, very big way. The data dividend which India will see in the next few years in terms of, the digital identity getting created for all Indians. So how are these banks going to sort of, build the digital footprint is something which is going to be extremely crucial. So I guess that probably, as I said, I think raising the capital for some of these players will not be as much of a challenge as it would be that how you're going to deploy and how you're going to truly reform it. And part of this reform would go in getting, the best possible private sector professional managers to help run and turn around some of these banks. And when I say turn around, in the sense that, the assets are already there, right? I mean, great brand is there, great network is there. And honestly, experienced people are also employed over there. It's just that, how do you bring in the entrepreneurial spirit, leverage digital to make some of these things happen and then possibly unlock value per se.
Sure. So from there, I want to just jump to Ashish. We have seen a plethora of announcements, especially in the insurance industry, the last couple of months in announcing standardization of products. And now with the foreign capital going to come in, if I were a foreign investor, I'm going to actually say that, I actually want to customize products. The best way to make the market more inclusive is to give more choice and not shrink the choice. Without getting into specifics of any particular product or projects, we also know that some of these social insurance schemes that the private sector also has to do actually eats into the capital. It's not being profitable at all because of the pricing point. And at some point in time, the private players will lose interest unless it's a very, very small proportion where you can say, I can afford to take this loss. So where do you think the product choices are going to come from?
So I think, firstly, we should understand that the market is large enough. And the market is so large that it can absorb a set of standard products, customized products, segmented products, women-specific products, cancer-specific products. The market is really large enough to be able to do this. I'm a great believer in customization. And we've done, segmentations and sub-segmentations all our lives. And therefore, the sharper that you're able to target a product to a customer set, the more likely its take-up rate, sustenance, persistency, and all of that are critically important elements. Otherwise, it's easy to sell products in this market. They don't sustain. So I don't think customization is going to go away. If at all, it is going to become more and more segmented, more and more specific. You could see rural products, you could see farmer products, you could see more of women products, you could see children products and things like those. Now, there is this whole argument around standard products, and the regulator has pushed, and several of us we've also made some, standard products. And you're right that from a pricing point of view, it is not extremely attractive. It is also a little risky because not all of it is reinsured. There is a certain amount of reinsurance available in India. And when it comes to some of newer genres of products, the reinsurance support is of a lesser order. Typically, the insurance market works with a big backing of reinsurers because they have global experience and they have a large amount of data and statistics that helps for you to get insights, because our market, all said and done, in the private space is only 20 years old. And they've operated across markets that have been 100 years and 70 years and all of that. So that data and that support is very useful for pricing. At the moment, that support is of a much lesser order. So you're right. The standard products therefore operate in realms of lesser profitability. They also operate in realms of some uncertainty on account of this reinsurance experience not being there. Therefore, yes, most insurance players would take an approach to say that I would support to a certain extent. We would go ahead and write a certain amount of that product. So that overall the customization, the specificity of products and the standards products blend together to generate a certain profitability, returns, and things like those. We must also remember that a part of standard or a part of a product pricing is distributor commission. And these are sell products. Yeah, I mean, typically insurance products aren't bought off a shelf, and experiments around bundled retailing, etc., are successful only to a certain level. That has not been the primary driver of penetration. In certain areas of bundling, it's worked very well. You buy a home loan, you get a credit shield along with it. Yes, you bought a car, along with that came a car general insurance, surely. So some of those bundlings along with asset purchase, etc., have been very successful and one way of getting product specific insurance going. But then beyond of that, a lot of mall insurance or Woolworth kind of models in India haven't really progressed very efficiently. Therefore, there is something called distributor commission, because at the end of the day, there is a guy who has to walk to your house and solicit a product with you and be able to market it to you. So there is that cost of selling. So if you're going to price the product in a particular way and it's a standard product and the cost of selling that is baked in is 2%, I'm just throwing a number. Sure. Well, that guy is not going to walk to your house and be able to sell it for 2%. So some of these distribution models will either reinvent themselves. And all I'm saying is that so far that reinvention hasn't happened.
It's not happened.
It's not happened. It did happen to a certain extent when we had that PMJJBY schemes 4, 5, maybe 6 years ago. It led to a certain amount of penetration, but it stopped beyond of that. And I would say that none of those portfolios are hugely profitable to the insurance company. Some of us managed to ward off the fraud risk, etc., in a more successful manner. So you broke even on those portfolios. So that's where it lies. I think the space is enough for standard products and customized products. Customized products would be very specific to needs, would have distributor commissions backing it. And therefore, there is a reasonable probability that those would penetrate and, the game would pan out for the seller, the buyer, and the distributor. Some of the standard products, we are still waiting for this space to evolve to see, in absence of a hell of a lot of distributor motivation and commission, how exactly will this space pan out?
Thank you, Ashish. Thank you, three of you, for your time and your comments. Much appreciated. We're wrapping it for going on to the next panel. Abhinav, over to you.
Thank you, Srinath. Thank you, Ashish. Thank you, Bharat. Thank you, Monish.
Thank you.
And like everybody predicted, this will be more of an infrastructure sector than the banking and financial services because the discussions have been focusing on infrastructure. We move on to the next part of infrastructure. It's called the real estate. I'm joined by Ashish Sinha, who is the Senior Associate Editor at Business World. And his Power Pack panel, we have Ashu Gupta, who's a partner at Shardul Merchant Mangaldas and Company, and Mr. Hemal Mehta, who is a partner at Deloitte India. Ashish Sinha, who is a Senior Associate Editor and is one of our most senior journalists, will lead this conversation. Ashish Sinha, over to you.
Thanks, Abhinavji. I hope I am audible.
Yes, you're audible.
And hi, Hemalji. Hi, Ashuji. Welcome to this special post.
Hi, this is Ashu. I hope I'm also audible.
Yes, ma'am, you are.
Hi, Ashish. This is Hemal Mehta. I hope I'm audible as well.
Yes, sir, you are. Thank you for joining, sir.
I think Ashu is not visible.
Ashuji, if you can, is it possible for you to switch on your camera?
Ashish, I have a very poor network. If I switch on my camera, it may just go off. So.
Okay. So let me first start with Hemalji. So much has been announced in this budget on health side and on taxation side. What do you make of your initial quick thoughts on the allocations made and the reports shared by Finance Minister on the infrastructure and the real estate side? Is it as per your expectations, or has it surpassed your expectation, or is it just meets the expectation? What are your initial thoughts on it?
So let's break this question into two parts. Let's talk about infrastructure first.
Sure.
Right. On the infrastructure side, I think Finance Minister was very vocal to say that we are talking about road, railways, metros, power, seaways, shipping. So a lot of things she spoke about in the infrastructure sector, and I think she has opened up even the investment of a sovereign fund or a pension fund in the infrastructure sector indirectly. Till now, we used to have direct benefit of a tax, which was only open for ADIA and any other institution which are qualified. Now they open up indirectly. So I think to my mind, it's a big move. The entire thrust of moving all the public sector into an InvIT to actually monetize their asset is also a big move. I think it's already been happening. We have been seeing in the market, and that's a big move. On the real estate, I think the expectation was that the finance minister will come up with some more shops for developers and end users. Now they have, but probably it has not stand up to the expectation. Imagine, let me talk about a developer first. For a developer, an affordable housing project, there is a 1-year extension which has been given. If they are into affordable housing project, their profits will be not taxed, which arises from that particular predefined business, subject to conditions. That particular benefit has been extended for building up a rental housing society, a rental housing project. Though the speech said it is mainly meant for the workers who are basically migrant workers, but the Act does not talk about it. The finance bill does not talk about it. So maybe I'm expecting that some rules around it will come up. But the point really is that if you see on the other end for the end customer, when they require to get deduction of the interest which is paid on the mortgage loan, that is restricted to a value of a residential unit which is up to 45 lakhs. I think tier 1 cities, even if you talk about affordable housing, 45 lakh is a very small number. I think they should probably have increased that to at least 1 CR, if not more than that. I think that expectation fell short. So that was one point. The other point which really comes up is the range of which they have brought into the picture of saying that, from your actual deal value to your stamp duty value, if the difference is 20% for a residential project, which is up to 2 crore, then the 20% will be accepted. Otherwise, the range which has been given in the tax law is 10% today. Now, the point really is that today, if you see real estate, we are talking about commercial real estate business. We talk about warehousing. We talk about logistic parks. Everywhere pan-India, we are saying that the commercial value, the market value of the land has been broken or has gone down so much that the variance with the rateable value or the circle rate, whatever you call it, is actually in excess of 20%. Now, there was a lot of expectation of this community to say that, if you want to really boost real estate, whether it is residential, commercial, whatever it is, I think they probably for 1 year, they should have flexed this range. I think these were two expectations which probably is not met. But I think including a housing rental project into the exemption category is a big move.
Sure.
There are a couple of other changes, but let me come back to you maybe.
Yeah, let me pick brains of Ashuji. Ashuji, what do you make of this national infrastructure pipeline? Now she has announced that number of projects will go up to 7,800, and she also gave a number of projects which have been completed.
So I believe it.
Yeah.
Yeah.
So what I was
I
getting
believe
at that number of projects which have been completed isn't that a too lower figure compared to the number of projects that have been added? Last year, it was announced 5,800 projects. Now she has scaled it up to 7,000, over 7,400. How do you see this entire move?
So actually, I believe it's a great move, considering that, this year the FM had to really walk a tightrope with the increasing fiscal deficit on the side and spurring industry growth on the other side, and trying to bring all these infrastructure and other things into InvITs. And it's helping to create new avenues to raise funds, increase the size of the investment, enabling the current players to deleverage their balance sheets. All this will certainly go a long way to help build infrastructure as well as incentivize other people also to look at it, especially, she's also permitting foreign investments into this InvITs and REITs. That will also go a long way.
And Himalji, what do you make of this national monetization pipeline, which she has announced that it will be launched, and important asset monetization measures will be taken? For example, toll roads will be given to NHAI worth 5,000 crore, or dedicated freight corridor for assets to be monetized by railways. In simpler terms, I mean, how do you decode this for industry, for people?
So let's look at the allocation.
It is actually giving greater flexibility to people to be able to get into the sector and to get assistance from other sectors as well.
Okay. Himalji, you wanted to say?
So sure. So just to add what Ashu said, maybe the whole idea is that if you see the kind of allocation the finance minister has done on various infra projects, it clearly gives me an idea that I think they are really hellbound to create actually a large amount of jobs in the sector. Now, to fund this, I think the idea is that whatever infrastructure projects are readily available, why don't they monetize? Now, today, if you see, we have been seeing in the market that they already started
That's
monetizing
right.
a lot of infra projects, right? Now, the point is that if you also notice one of the areas point which she just touched upon was that the surplus land, which is sitting with these government companies, that also they're trying to monetize. It's not only the completed projects. So
But this
they
has
are
been
looking
on
at
the agenda for past so many governments and finance
yes,
ministers. It's not a
yes,
new
you
thing.
are there. So let's presume that Air India. Let's take an example of Air India. Now, forget about the divestment of Air India, but suppose Air India was continued, the amount of surplus land Air India as a company is sitting on, probably if they can monetize, they're talking about raising money from various other options which are available today with the government. Okay, Ashish, one more point I wanted to just bring the attention was to raise the debt funding for InvIT and REIT. Right, that was also a point she highlighted, which again gives us a very clear perception of perspective that by any mode of structuring or by any mode of instrument, today I think they are looking at raising money to boost the entire employment and the infrastructure in the country. I think that's what probably my take was when I was going through the speech.
Actually, what I believe that land is a very difficult commodity, and the builder has to spend a lot of money on buying land, getting the title clear and all, with the government willing to get its land and divest it. And, it can give it on long-term leases. This will help the developers a long way to go, because the title diligence and all becomes much easier. Land becomes available much faster. The amount that is spent on doing diligence and all and developing a project gets reduced substantially. This will also help, to develop closer to connectivity and other issues, because otherwise people go to buy land and very back and beyond areas. So this will actually help in a very big way in not only developing the infrastructure, but also in real estate terms, like office, commercial, residential, and all of that, including affordable housing.
For the salaried class, are there any bigger takeaways apart from this extending this 1.5 lakh on affordable housing or just little bit? I mean, did you find anything noteworthy of underlining that which is going to help common man?
By increasing it by an additional year, this is helping in relation to the pandemic that has been affecting everybody, and people were not able to afford, moratorium was given and all. So it helps also. The developers also have got an extension by the year, which means that maybe next year also they may get another extension, and it is helping them by bringing this rental housing into this, which is coming the first time this year, will also help in seeing it's come more from the perspective that the migrant workers and all who had to really walk and go to their hometowns, which were so far away, at least when such a facility is available, the same thing will not occur again. That was the very good intent with which it has been introduced.
Himalji, the intent of finance minister, any budget, any previous year's budget has always been there are good right noises are made, but then the year passes and we don't hear a lot more about the project.
True.
Like in this budget, there has been talk about second phase of airport modernization, privatization, then creation of expressway corridors. Then there is the talk about expanding metro rail network. How much of this, if you for a moment just assume there was no COVID, how much of this in the last 2 or 3 years has been achieved on ground from where you see, because I'm sure you deal with governments and private companies and all. What is the thing? Are these just the right noises to make, which was on the anticipated lines that she will come and it's going to be an historic budget, etc., etc. So all the right noises have been made, all the checkbox have been ticked. But on the delivery side, what's your observation being? And this is like panning past 2-3 budgets, not the specific.
Right. So Ashish, let's go back to what had happened till now. Before the pandemic actually hit us. I think there was a class of investors with pension funds, sovereign wealth fund, large private equity players. I'm sure they would have had a meeting with finance minister, prime minister to give them a comfort that they are looking at a long-term investment. They are looking at like 15, 20 years plus investment in infrastructure. So they are happy to fund it. The real challenge is it's not only central which is going to drive this, it is state as well. So today, if you are sitting in Delhi or I'm sitting in Mumbai, and I see that a lot of these infrastructure projects which are started in Mumbai are all half done.
Yes.
Today, I think when these realities have been seen by these investors, it is always a difficult task for investors to take a business call on such kind of infrastructure asset. Mm-hmm. So if you see, the drive has actually moved from an equity investment or a PPP project to a debt funding. Yeah. So the entire wind of discussion today, the way I gather, still, we really require to go to fine prints and understand what are the thought process behind this entire discussions. But I think the points which I'm picking up from the discussion is that they are talking about now opening the debt market for infrastructure projects. Mm-hmm. So you are taking a long-term debt to fund a long-term infrastructure project. Mm-hmm. It's not equity, right? Now the point really is, which you and me really require to see. Maybe next year when we talk on this, we'll probably touch upon this point again. Mm-hmm. That how many projects are really seeing the light of the day? How quickly we can finish this project, right? But certainly, I think the Prime Minister and the Finance Minister are very clear that come may what, we really require to push this infrastructure sector, which is a priority. So let's open up all the floodgates. I think that's the positive sign what I see it as in that sense.
And one point to Ashu and Hemal both. There is this mention of smart city has seemed to have disappeared. I mean, this was all part of urban infrastructure creation. That word is no longer spoken or mentioned anywhere. Yes. What are the reasons? I mean, are the smart city project done over with, or what's the thing on ground? If both of you can address one after another.
Ashu, you want to go first?
You are on mute, ma'am.
Okay.
Yeah, actually the smart cities project, there has been a very brief mention. Whatever we have seen vis-a-vis Maharashtra, the way it was anticipated to take off, it has not taken off in that manner. It has been very, very slow. So maybe that's the reason where just now they've not focused so much on the smart city, and they are more focused on affordable housing and the other immediate issues. Maybe in the long term, they may look at it once the economy is a little bit in better shape.
Hemal?
See, Ashish, I think to my mind, I think the entire smart city concept, which was there in the mind of the government, probably has not been taken up or it's not been taken off in that direction. So today, couple of developers, a couple of entrepreneurs who actually entered into smart cities, they probably broke down the projects into smaller projects, and they actually, a lot of people have gone to denotification. There are one or two examples which all of us are aware of, where they've aggregated land, but they probably have gone for denotification. I think what has happened is that critically, we really require to think through that if you want to really develop 150 acre of land parcel as smart city, we really require to have a debt funding coming in. Today, though we are talking about business, ease of doing business in India, but when you have equity funding coming in, when taking out money, not under the FEMA regulations, but under the income tax regulations becoming more and more expensive, I think all the investors are going to look at some kind of efficiency. And the efficiency really required to be brought into picture either through easing out certain provisions for equity investment or probably opening up the debt in those projects. I think now with this entire push of getting additional debt and through the FPI channels, even for a retail InvIT where the debt is now opened up, and they are bringing on the same line as FPIs, because under the regulations, they are bringing on the same line as FPI guidelines are today. So it gives me an idea that now I think they have realized that unless they don't open up this particular window or this particular corridor, the investor is not going to come up. Now, smart city or without smart city, if you do a mix of residential and commercial, it's a matter of a commercial decision to be taken by developer. But in today's time and the way the demands are panning out, it looks like that to see a smart city project, really somebody really finishing a project or starting new projects looks to be a difficult task in today's time, because the environment today probably is not great to consume so much of real estate. Plus, the entire working from home concept has come up, where the entire demand of tier 1 cities probably has reduced. The fresh residential units, the rental business, the rental market. Rental market was otherwise also, it was only a maintenance which was being taken care of. Rental markets were never an income yielding kind of opportunity in India. But having said that, that also has gone down. So we really require to now see for next 6 months to 1 year, once the vaccination is done and once everybody resumes to normal, and what's the new normal like? Maybe after 12 months, maybe exactly next year, this time when we talk, we probably touch upon smart city once again.
And this has been mentioned also of the ports and shipping sector. I mean, but not with that much of focus as previous years, as during the time of Arun Jaitley presenting budget and all. So is anything substantial happening in the port sector on the shipping side, or a lot of work has been done? As Mr. Gadkari had pointed out in one of the previous press conferences in last year, that a lot of things have been. So what's this actual ground status of the shipping in the port sector right now? Because briefly it was touched upon by the finance minister.
Yep. So let me take that question, and Ashu, please add any thoughts which you have also the same. So on the ports, as you rightly said, I think there was an initiative which wasn't taken up. I think we have seen waterways. I would rather consider waterways as a new mode of transportation, whether it is for commercial or individual or for tourism. I think the entire thrust of Mr. Gadkari was to actually push the waterways into the transportation system, and speed was the whole idea. Now let's take example of Gujarat. Gujarat is the best example to start with, right? Today they probably are using waterways to the core. They can still do more, but they have really started using. So the way they connect South Gujarat with North Gujarat or with Kutch part of Gujarat, right, through the sea waterways is fantastic. Today we see in Mumbai also, we have connections with Alibag, where you go under a rowboat, just put your car inside and just travel, right? Sure. So the exploration has started. Now seaplanes has become reality. We have seen it happening. Now the question is the volume and the capacity. Now today, if you ask me, can I really get in a ship from Mumbai and straight away go to Gujarat, maybe a Dwarka, which is one end, or Alang, which is another end? The answer is no. Today we don't have that. But I think it's a matter of time. Waterways is the way to transport, right? And that's where a lot of small countries have really mastered their art. Look at Singapore, Hong Kong, a lot of places they have mastered this art of waterway. I think look at for some of the South European regions, Italy, France, the way they have explored waterways, right? Unbelievable. I think it's a matter of time, but there is a thrust, there is a pressure which has been coming on that. I think Mr. Gadkari is doing a lot of work on that. We really got to see that, do we really have dredging as a business? Because it's a big business globally. Yes. In India, do we really have dredging as a big business? Answer is that we really require to work on that. I have not seen many dredging companies sitting in India. They are doing some work here and there. Some of the ports are dredged. But whether all ports have got dredged, no, I'm not sure. It's a matter of time, but I think there is a focus on waterways. I think it probably next 2-3 years we'll see a large amount of transportation happening through our waterways.
But does government need to support this, fund this, and in that process mention this in the budget, or is this more in the domain of the private sector and they just need a policy kind of a push?
So I think there is certainly a policy kind of push which is required. But because it's an infrastructure which is connected to a government help, because there's a lot of government intervention which will require to create this kind of waterways, it has to be a PPE model. The way we are doing toll roads, say for example, and the toll road model actually got successful. And I think that's where some of these waterways probably projects requires to really come. Because today I don't think so a lot of private sectors would actually look at India to fund these waterways, with a lot of regulations involved. So government really required to take initiative. The way probably today our ministry has taken a initiative of actually monetizing all the completed assets, infrastructure asset through Innovate or whatever it is. Right? I think that's how they really require to take a push. I'm sure private sector will jump in.
Okay.
Because the volume of India cannot be ignored.
True, true. Let me move quickly to one or two last points, which is about private equity investors. Now, over the year, a lot of industry reports have been gradually mentioning that PE investment and interest in real estate sector, be on the commercial side or not so much on the residential side, has been there. It's not dipped because of COVID also. So,
Right.
couple of things which come to your mind, which is for the PE, private equity investors or foreign institutional investors or overseas investors who may be looking at the real estate sector in India to basically jump on the growth of warehousing or commercial real estate or office space. Office space, incidentally, did not get any mention, especially with
Yes.
work from home kind of an era. So,
Yes.
Ashuji, any your thoughts on it? Any takeaways for overseas investors in today's budget for the?
There wasn't really any mention as such, though it would have been good if the government would have considered there are present regulations wherein there is a certain specified area and a built up area and land area, which we believe is a bit on the higher side, considering that smaller projects are not able to get the benefit of this, and there are a lot of smaller projects which have been stalled. So if the government could have considered it and reduce the areas both in terms of the land area as well as in terms of the built up area, it would have greatly benefited not only the developers but also the home buyers whose projects have been stalled and who are stuck because for so many years the developer has not been able to do anything further because of lack of funds or otherwise. If the project size would have got reduced and government would have permitted FDI into those projects, then maybe the projects would be able to revive, and then with the help of this FDI they would be able to restart the projects. So this is something which we feel should have been considered but has got missed out.
Himalji, your views?
Yeah, Ashish, the point really is that we, of course, spoke a couple of times on the debt funding, right?
Yeah.
One of the move which I see for private equity players is the stress asset, where finally we probably will be following a Spanish or a Greek model, where they are saying that we'll pull all the stress assets into one basket, and then we'll invite the investors. I think that's what exactly these two countries did. So the sizes are different. So finally, I think we probably are progressing in the right direction because our IBC and some of the SURFICEs probably were not as successful as it should have been. Now let's talk about real estate specifically. We have seen a lot of interest of private equity players, especially say Blackstone, Brookfield, which has set up REITs in the country. Their commitment to the commercial asset is still very high, in a hope that commercial activities will increase. Though currently in last 6, 8 months, 10 months, we have seen a slowdown in the uptake of commercial asset, and there is a lot of return of commercial assets which has been given back to the developer. Certainly, I think it's a very promising. It's a very promising analysis, saying that the commercial asset will come back into its own demand, and that's what we also hope. Right? There is certainly an uptake from the private equity guys on a long-term basis for a bit of maybe we're talking about 3 to 5 years or 10 years. They are looking at commercial asset really picking up well, and the valuations probably getting into. But then I think the larger play is that a lot of these players are trying to get into the REIT mode because the REIT looks to be a favor for some of these large investors.
Last point on this migrant worker home category, there was some mention that some kind of incentives will be given to the developers who are constructing homes for the migrant laborers. What is the scenario? I mean, are developers taking it seriously? Are they allocating these things on ground, or this is just academic discussion right now? Nothing has started off.
So Ashish, basically, they are considering it, but they need to develop. They have circulated certain regulations and certain guidelines also, and are seriously contemplating it. But a little bit more needs to be done on the regulatory front, with respect to how the rate will escalate, how things will work out. But developers are looking at it in a positive way, and it is being given as a tax holiday to people who will be doing this kind of work for migrant workers. So people will look at it certainly.
Okay. Himalji, just we are running out of time. So your quick short view.
I think we really require to wait for the time to come, that how many developers are really taking a plunge on this particular market. Because as I said, the rental market probably doesn't look to be that attractive market. And whether there is really a market for migrant worker, we really require to see how it really pans out. Because in tier 1, tier 2, to have this kind of projects for migrant workers and expect to get a good return, to my mind, looks to be a challenging kind of equation. But let's see how the math pans out. But yeah, we are running against time. So Ashish, over to you.
So thanks so much, Himalji, Ashuji, for participating in this special post-budget analysis brought to you by Business World, and hope to connect with you and for more analysis in coming days. Thank you.
Thank you, guys. Thank you. Thank you.
Thank you, Ashish. Thank you, Hemal. Thank you, Ashu, for this insightful discussion we had. Housing, of course, forms a crucial part of the budget every year. And whether the government is on its path for 2022 housing for all, we will see. From housing, we move on to auto. They have a lot to cheer with the announcement of the new scrappage policy. And of course, the spend on infrastructure is likely to boost a lot of auto spends. I'll pass on the baton to Siddharth Shankar, who is the assistant editor at Business World. He leads the auto sector. He covers auto sector extensively. Siddharth will be joined by Mr. Rajiv Singh, who's the partner and automotive leader from Deloitte India, and Vinkesh Gulati, who is the president of FADA. Siddharth, you look quite happy. Auto sector में काफी अच्छा आने वाला है कुछ. So I pass on the baton to you.
Yes, finally, auto sector को address किया गया है, and pretty interesting. Last year कुछ भी नहीं हुआ था, and this year we have scrappage policy as we spoke earlier. Ashish sir, what is your view on this?
It's a policy, Siddharth. My only apprehension with is that this has been talked about in the past, with Mr. Nitin Gadkari also bringing it out, industry association talking it out. But unless incentive model is brought forward, what will be the incentive for you and me to take our car and get it scrapped? What are the dynamics? What is the cost factor? These are the initial thoughts, but experts will be here. They will.
So exactly, commercial vehicles, I'm hoping this would enhance the demand. Kuch to hoga isme. Let's hope something positive comes out.
I think Vinkesh Gulati has already joined.
Yes.
We're waiting for Rajiv. But Siddharth, there was no special announcement regarding EVs. We were expecting some subsidies.
Yeah, there were no announcements regarding EVs, but there are announcements. मतलब जो roads and highways बन रहे हैं, that is a positive thing that will indirectly affect the auto industry. At the same time, there is something negative as well. Components के कुछ some parts of the components have seen duty increase. We have just got information from ACMA, and a bunch of components have seen duty increase. And Vinkesh sir is here.
Okay, Siddharth, we pass on the baton to you. Rajiv, Ashish and I sign off. Okay, Siddharth, over to you.
Vinkesh ji, what do you think about the budget 2021? आपका क्या key takeaways है? You look happy वैसे.
It's the way you have to be in the market. So obviously, we are the dealers part of it, and whatever comes, we have to cover up the way. So overall, it's a mixed bag reaction for the budget. No doubt, finally, a long-awaited issue of scrappage has been clearly accepted that it is coming, and a time gap has been announced. So we are expecting that this will give the huge, I'm not saying direct retail benefit, because obviously we are still waiting the fine print to come in another fortnight to wait for actually what incentives will be passed on to the customer for. But at least the intention and the message given by the finance minister in the budget is very clear that now the vehicles are not for lifelong. Every vehicle has a lifeline and it has to move off during that. So it automatically gives us a future consistency on retail. So we know that if a customer is buying today, he's there. If it is NCR, it's 15 years for passenger vehicle. If it's out, it's 20 years. So we can think of this replacement demand. We can be confirm on this replacement demand for future. So one big thing, and like our Nitin Gadkari ji also mentioned, and even our data shows that if we take 1900 as a base figure, so there are some 37 lakhs commercial vehicle on road and some 52 lakh passenger vehicle on road, which are actually eligible for these voluntary scrappage. So commenting that how many vehicle will actually come on for scrappage, I'm doubtful. But as an estimate, some 10% commercial vehicle and 5% of passenger vehicle would be minimum plying on the road. So automatically, those will be the initial benefit what we see as this policy comes over. And slowly and steadily, it will give the customers push to replace their vehicle in the future. So one big thing which has benefited. Obviously, the second big thing which always every budget supports us is on the expenditure what government does. And if you know, the commercial vehicle category had been in real bad shape for the past 2 or 3 years.
2 years, yes.
Even post-COVID, the passenger vehicle and the two-wheeler had seen some growth, some months, and they are already back on track. But MNHCV segment is one where we are not finding the kind of growth we were expecting. So the kind of investment committed, like 6,575 kilometer highway proposed for Tamil Nadu, Kerala, West Bengal and Assam, and another 19,500 kilometer work for Bharatmala project will put in a real demand push for the commercial vehicle segment. So that's one big thing what we are looking up to, because that is a segment which really needed the support to come back on track.
Sir, now there were a lot of demands from the dealer associations, and 2020 we have all seen that the dealers actually were really struggling because showrooms were closed and people were also not going out. So, sir, do you think this budget addresses all the concerns?
Very difficult to answer that. Obviously, there has been no direct benefit to by this budget, but obviously there had been a lot of things which will in turn benefit it. So see, as a dealer, we were looking to the budget for demand revival only. So how the demand revival can come in only two phases. One is improving the sentiments of the customer. Second, giving more disposable income in the hands of a customer, in a normal human being. So obviously the second part wasn't addressed by this budget. So like we were expecting that there will be an increase in income tax slab. It didn't happen. We were also expecting that the depreciation, like they did in the last financial year for when the downturn was there, the additional depreciation was given for the last 3 months where 15% was addition for the company. That was also, what we were expecting that will come. That also was not there. Additionally, we had been following up with the finance ministry for long that even now individual people should also be given the benefit of depreciation, because vehicles are vehicles, they depreciate even if they are owned by a company or an individual. So if that would have happened, this would have all given us the boost of the demand, because we actually need more vehicles to go on road, more retail to happen. Once that happens, the dealers are happy, the association is happy. So obviously that didn't happen, but overall still it's a good thing, because all across the government has given the required support to the economy. So the economy improves, overall GDP improves. In turn, we also benefit.
Great, sir. Sir, I would like to welcome Mr. Rajiv Singh, who is the partner and leader automotive Deloitte India, and he will be sharing a bird's eye view of the budget 2021 for the automotive sector. Welcome to the show, sir.
Yeah, hi Siddharth. Good. Are you able to hear me, Siddharth?
Yes, sir. Yes.
Yeah, because I received a few messages saying that I don't know whether you can see me or not, but glad to be here, Siddharth.
Right.
I think good to be here. See, Siddharth, I think since we heard the finance minister speak about the scrappage policy, there has been a lot of talk, and not just the scrappage policy, but I think a few other things as well, which are quite a few positives. I think from an auto sector perspective, something like a scrappage policy has a dual impact because it is not just meant for increasing the demand of, say, the new vehicles, but very importantly, it has an impact in terms of cleaner air, in terms of higher or more efficient vehicles on the road, and so on and so forth. So I think something that the industry was really waiting for long, at least we are seeing some steps taken in that direction. But I think that we just need to be a little more cautious because, see, if you go across the globe and you look at Germany, you look at UK, you look at France, you look at Japan, I think many of these countries did come out with a scrappage policy. But whenever they came out with the scrappage policy, and the largest policy, if you see in the recent times, was what Germany did in 2008. So whenever the countries come out with the scrappage policy, they came out with some incentives for the person who is giving away the old vehicle, right? So
cash for clunkers.
Yeah, that's right. That's right. So what they did is that they said that, okay, for every vehicle, every old vehicle that you give back at the end of life, could be 10 years, could be 12 years, whatever that life is defined by that law of land. You say that I'll give you a certain amount of incentive in cash, which goes back as a subsidy or as an adjustment whenever you're buying a new vehicle against it. There are certain countries who also gave it in form of some coupons, which could be used for public transportation. So not necessarily that you're giving away your old vehicle like a passenger vehicle and buying another one. You get an equivalent in terms of something that you could use against the public transport. Now, what we heard so far since morning is that we will have a scrappage policy. We will have to wait. It is going to be a voluntary scrappage policy, it appears. Now, which means that people will have to take the vehicles to certain centers, get their vehicles tested. Now, once again, if I go back to Germany as an example, they have a large number of authorized centers which really do the testing of these vehicles. So we'll have to wait and see that, okay, when is that infrastructure going to come up in the country? Because we also require infrastructure for testing and certifying these vehicles. Because in the absence of these certifying agencies, this will only become a face wash. So it's important that we see the implementation where people come out with these centers who do testing of these vehicles and then give the testing certificate, saying that the vehicle is fit for being driven on the roads. But I think those are the devil lies in the detail, as we always say. So we'll have to wait for some of those things so that to realize whether this is really going to impact in terms of increasing the demand for new vehicles or not.
Great, sir. Vikesh ji, there is a lot of focus from the finance minister on the rural sector, which also means tractors have always been doing well. Lockdown, maybe they were very, very good sales number there. And now with so much of focus on rural areas, do you think, are you happy with this focus? Do you think more tractor and farm equipment will be sold, or not just tractor and farm, even passenger vehicles in the rural areas will pick up?
So Siddharth, you are right. So whenever rural is given the importance, and lately we have seen the governments are giving importance, and that is the thing, that is the category area, the segment which is actually able to support the auto segment a lot lately. So if you see, even after the lockdown, so that the farm sector was one which never went through the lockdown, and that has actually benefited us when we came up in unlock 1. So practically April only was zero, but whenever we started, or even in April, the tractor dealerships were open for their service and all. So rural has always supported us, and it's not just tractor, it gives a real good boost to two-wheeler market also, and the passenger vehicle entry level also. So I'm not talking on the premium segment, but overall it gives a good boost. And the current government has already shown us like figures of 200% some payments to Rabi or something and all. So all put together, the kind of focus they have given to the rural will slowly give the benefit to auto retail, obviously. And it's been already proven for the past 6 months also that rural has supported the auto retail to come back so fast on the track.
Right, sir. And Rajiv sir, what's your view on this? Rural has been the focus this time. Farmer protests aside, this has been the focus. What the auto sector will take away from this?
No, see, I think that I completely agree with what Vinkesh mentioned. See, rural has been one of the pillars in terms of not just the tractor industry, but as we heard, even for the two-wheelers, the entry-level passenger vehicles, the used car market, and so on and so forth. So I think that it's important from that perspective that the government continued their focus on the rural market. We should also keep in mind that there was a lot of migrant labor over the last few months that we saw, which returned back to the rural market or the rural areas in that sense. And hence there is a need in terms of doing a little more on the rural side to ensure that entire economy kind of continues to kind of grow. With the good monsoons, fortunately, with the good Rabi season, and with the support, I think, from the government, we do expect a lot of positives on the auto sector from the rural economy. Hence.
So, sir, we have been talking about scrappage policy and rural demand right now, but there are some negatives here as well. Certain auto components duties have been increased, and we just got a press release and information from ACMA, and a list of components have been increased. What are your views on this? I can understand PLI scheme on auto components, but all these components right now being increased, this will incur higher prices of vehicles. First to you, Vinkesh ji, and then to you, Rajesh.
Siddharth, yes, I agree. But point is, you have not seen the decrease of 7.5% in steel.
Yeah.
So, and steel is one of the big, and if you remember, January, all the OEMs increased the prices around what, 2 to 5 or 6%. On
Absolutely.
Just 1 point, that steel prices has gone up. So even if it is 7.5%, and then the message was the steel prices have gone up by 3 to 4%, and it gave the effect in the market of increase 2 to 7%. So if 7.5% goes down and OEMs transfer that price benefit in acquisition price for the customer, we are sorted. So, but on the other hand, I'm not the right person to answer, but what I could judge from one or more discussion, that the custom duty which have been increased was basically to help our in-house production, so that there is already, we have those component manufacturers in India, so they'll get some more benefit if they compete with the outer world. So with that the case, it's good. Even if it is not the case, I feel still the steel reduction will give the required support, not the rate percent.
Sir, sir, don't you think it's like you reduce the duty on steel and you increase the duty on components, so the base price remains the same? What is your view on this, Rajiv, sir?
No. So I think that the bigger news out here, and in fact, I think both are positives. Firstly, so I don't see anything negative out here. The bigger news out here is steel, and let's remember that a 7.5% reduction in steel duty could mean about 50-60% of that could mean about 3.5-4% kind of an impact on the end vehicle pricing. So if the OEMs have the ability, then they can probably pass on, because I don't know how many OEMs would have actually been absorbing some of these increases in the past. So hence it's not easy to say that, no, we have got a 7.5% decrease and so on and so forth, and everything gets passed. No, it's not going to be that way. So each OEM will have to see what is the impact of this decision on their particular product portfolio. But that's a big positive news. And even some of the auto components where we heard, Siddharth, that they are reducing increasing the excise duty and the customs duty and so on and so forth, is actually in tune with Atmanirbhar Bharat, because it's all about, can you start manufacturing some of those parts here in India locally? And the engineering capability of the country is really up there in terms of ensuring that we produce these high quality parts within the country itself. So I think that it'll help in some of in terms of making some of the tier 1 large players who are looking at adjacencies, who are looking at growth, to try and see, can they get some of these tie-ups into India? Can there be a few more technology tie-ups or a joint venture into India where you start manufacturing some of those parts in India? So I think that's a very positive news, rather than, I don't know what probably is the news that you're referring to. But in my view, this is a very, very positive news, because this will help in terms of generating more capabilities and, very importantly, more employment in the country.
Yes, sir. Due to the PLI scheme that the auto component sector is already there with.
Yes. So just see, I think what I liked is that there was so much of consistency over the last couple of years that you saw. So in 2019 January, you heard about the corporate taxes, and you heard that there was an advantage for some people or people to put up new facilities because they got an advantage in terms of a reduced corporate tax up to say 22, 23, and so on and so forth. Then you had the PLI scheme which came in. And now the customs duties are being moved, which are all in line of saying, how do you increase further manufacturing and investment in the country? So I see really a lot of consistency, and it's not that the decisions are going back and forth or there is some friction or something that you see in one announcement to another announcement. This all seems to be well in a continuum in that sense. That
Right. So now to both of you, what other indirect impact has been announced in the Union Budget 2021 that would actually be beneficial for the auto industry and the consumers? Venkatesh, sir, first you.
Before answering that, I'll want to put one point. See, as of today, the whole industry has been affected, at least the car segment, because of the shortage of semiconductor. So if our component manufacturers would have thought this before, and the kind of pressure Atmanirbhar Bharat Indian government is doing, and like Rajiv ji said, with all the process for the past 3-4 years, the budgets have already pressurized indirectly that everything should be made here by component manufacturer, whatever. Today would not have been standing in a shortage position. The demand is there. We want to come back on track after COVID. And as of today, I don't know if even you had also covered somewhere that the shortage, the waiting period is 8 to 10 months. Think of it. If we would have been self-reliant, Atmanirbharta would have been there, we would be happy today. So even if custom duty has been increased, I feel that's a good thing. Maybe internally, the components manufacturers gear up and give the support to OEMs more faster and better. I feel that would be the way forward.
That's the idea, sir. What about you, sir?
So, yes, there's a couple of things I think which caught my attention in the budget. One was a significant amount of focus in terms of infra buildup. And yes, we can always say the fiscal deficit is say at about 9.5% projected for the next year. But the borrowing that we are doing is actually all for asset building, and which is very, very important because we are not borrowing for meeting our short-term demands or something. We are actually borrowing for asset building, which is going to also lead to a lot of new job creation. And from an auto perspective, whenever the investments in infrastructure has gone up, whether it is in terms of railways, whether it is in terms of roads, whether it is in terms of the entire infrastructure that we spoke, FM talk about, it is going to lead to increase in demand for heavy duty, medium duty vehicles, as well as increase in demand for construction equipment vehicles, dumpers and other things. So that is one thing that I took out. And the other thing is, I think we also heard the finance minister talk about a huge focus in terms of urban transportation somewhere. Maybe it was not covered as urban transport perspective, but if you see the focus on metros, the focus on ensuring that there was a certain amount of budgetary allocation which was on urban transportation, I think the much needed push which was towards the buses is what we could see, because that is one segment which has really got hurt big time during the COVID. Given the scare, the fear, people not traveling, and hence the demand for buses going down and so on and so forth. And now with the COVID vaccine coming in, hopefully by July, August, this vaccine is available, say for masses and so on and so forth. I think the good news is that with this push on urban transportation, we could see increase in demand even for buses, Siddharth. So that is another positive that I saw out of the budget.
And so with buses and metros, I believe last mile connectivity will also increase.
Yes,
so
yes.
Three-wheelers and everything.
Exactly. Not just buses, but all the smaller vehicles which are used for the last mile connectivity. That's absolutely right.
Absolutely, sir. And now coming to electric vehicles. So there was not much announced here. And recently we have also heard about Tesla coming in. So what are your views on this, sir?
Rajiv ji, go ahead.
Okay, fine. So I'll share my views maybe here, and Siddharth, I think that the government's push on EV has been really very, very strong. So let's not kind of think that okay, today we didn't hear, but today we heard something very different. Okay, today we heard some policy which was around the hydrogen, for example, and that is all about at the end of the day, let's look at it from a perspective of green energy at the end of the day as a country that we are talking about. But look at PLI, for example, or look at other announcements which came prior to the budget. It appears that the focus of government on EV is really very, very strong. The government is trying to see that how can we have more and more electric vehicles being manufactured, not just assembled, but when I say manufactured, you're looking at also, say, the battery, you're looking at some of the power electronics eventually coming in the country, and then so on and so forth. So the push is very, very clear. I think Tesla is one big catch. If we can get Tesla into India, and of course, from a Tesla's perspective, they may be looking at second to China as an option. From a perspective of the go-to market, from a Tesla perspective, and we expect that Tesla is not going to be only assembling cars. I mean, any luxury player for that matter, when they come into the country, initially they will have to only assemble because the volumes are low. It does not justify for them to have a large plant. They will not be able to recover all their costs and so on and so forth. But in the long term, the luxury players do want to start manufacturing in the country. So I'm sure that even Tesla will start more and more of manufacturing in the country. They will not limit themselves only to sales or limit themselves only to assembly of vehicles. So very clearly, it's a good move. But let's keep in mind that Tesla is going to address only a tip of the iceberg. I mean, it's going to address only the top few thousand folks who are the addressable market when it comes to the luxury car. But when we are talking about the ecosystem for EV to be built, we are actually talking of a lot of vehicles which are in the 8 lakh, 10 lakh, 12 lakh, 15 lakh bracket. That is where the volumes really get driven. That is where the demand really for power electronics or the demand for battery really is going to go up. So while it is good to have someone who's giving you the brand, but at the same time, it's also important that ecosystem is going to come up only when the mass market moves towards EV. So I think that is what will help in building the ecosystem.
Right. So, sir, we have spoken about rural demand. We have also spoken about roads and highways being made. We have also spoken about commercial vehicles. So now,
Siddharth, you're on mute.
So sorry, I thought it was me alone, but maybe you can't also hear. So,
am I audible now?
No.
Yeah. Now you're okay.
Yeah. Okay, sir. Now we've spoken about rural demand. We have also spoken about highways. We have also spoken about components. Sir, but last year, the main thing was demand generation. People were just not going out and purchasing products. So in this budget, for our viewers, I would like you to simplify. Has the government done anything to increase the spending power of the customer? Venkatji, first you, and then Rajiv sir, you.
So Siddharth, I already told you there has been nothing which you can term as a direct benefit to a customer, where his disposable income is increased, where he can go ahead. So there has been no change in income tax slabs or something. So obviously there are ease of filing return, ease of assessments and all, but nothing where a customer gets a direct cash. But automatically demand revival is just not how much money you have. It is everything. So even if the whole economy gets improved, which is clearly mentioned as per the GDP growth, what we have been estimated, or even if the overall sentiments improve, customer do come out for buying a vehicle. So I'll not say the budget has supported us directly, but indirectly in the long run, yes, it is on the right path of improvement of the sentiments.
Great. Rajiv sir, you?
See, I'll just refer to something that we do as an annual exercise. We do a global automotive survey every year, and we do this across 23 geographies globally. We did this in India in the month of December, and very interesting insights came. So it was November, December when we did, and January 1st, the survey was available with us. So of the total number of people we spoke to, 25% of the people said that there is no change in their plan of buying their vehicle. So whatever they decided, they said that we'll go ahead and buy that vehicle whenever they plan. 38% of the people said that whatever was my plan of changing my vehicle or buying a new vehicle, I'm pushing it out by 1 year or more. But what was interesting was the equal number of people, 37% of the people said that whatever was my plan of buying a new vehicle, I'm preponing that decision to buy. Okay, which was very important, because what it meant is the V-shaped recovery that we saw in our passenger vehicles was driven by the willingness of people to buy vehicles. This 37% is a significantly large number of people who said that I'm trying to prepone the decision of buying my vehicle. The only watered down effect there was most of them said that if their budget was X, their budget is lower than whatever their budget was, which means that if someone was planning to buy a 15 lakh vehicle, he's saying that can I manage it within a 12 lakh vehicle, or someone who was planning to buy a 10 lakh vehicle saying that can I manage within an 8 lakh vehicle. Now, coming to the budget and adding the two together, in the budget, there is nothing which really gives as a direct benefit to the consumers. But the question was not about affordability. The question was willingness. I think in Indian market, the affordability to buy was there with the customer. They were not willing to go ahead and buy. Now, if the budget can create a positive sentiment, okay, and quarter on quarter, the consumer feels more stronger about the economy. Clubbed along with that is the health concern. So with the vaccine coming in, the health concerns going down, that will help. So if that happens, the willingness factor will go up. So that is what I'm looking forward to more importantly. I think affordability is not what we were trying to look at. We were looking at whether the customer is willing to buy. I think if the budget can build that stronger sentiment, that willingness to buy will automatically come with that. So that is what is more important.
Great, sir. So now we are running short of time. So very quickly, Vinkesh ji, first you. How would you rate the budget out of 5? And what you think that one extra thing should have been there?
So I'll rate the budget, you can say 3.5 to 4 out of 5. One thing which I said, there were a lot of expectation that income tax rates or income tax things or depreciation would have, and if that would have been possible, so this was 5.5 budget. And that is where a lot of service class, a lot of people who are working even in private or government were expecting something to come to enhance their disposable income. That is what budget missed, I feel.
Great, sir. Rajiv ji, you.
See, Siddharth, honestly, I feel that it's very difficult to define what is a 5. So giving a score out of something that we don't know is very difficult. All I can say is that the budget was definitely a positive budget. So it was definitely positive in that sense. I think one thing I agree with Vikesh, what he mentioned. I think that one thing that if at all we missed was, and I didn't expect that the tax rates would have been significantly slashed at the higher level and so on. But I thought that maybe for the mid-income group, which actually drives the demand for either two-wheelers or for the entry-level cars, at that level, there was an expectation that maybe the government may do something given COVID, given the kind of pressures that people have gone through to do something. And the other could be that the government could have thought of creating some fund or could have thought of doing something else to make money available more easily for financing of vehicles. Because in India, vehicles get financed, a larger number of vehicles get financed. But neither of the two things is what we heard. So those are the two misses, in my opinion, if at all, what were the misses from the budget.
Absolutely, sir. I think demand generation is the key factor here, and the government should focus on that. And thank you, Vinkesh ji, for sparing your time and talking to us. And likewise, Rajiv ji, thank you for talking to us.
Thanks, Rajiv ji. It was great interacting with you in the session. Thank you.
Absolutely. Thank you. Thanks a lot.
Thank you, Vinkesh. Thank you, Rajiv. Thank you, Siddharth. It is absolutely right. What the government missed in this budget as far as the auto sector is concerned is giving money directly into the hands of people. We remember ILFS, and since then, auto sector has been on the downward spiral. Siddharth, thank you so much for hosting this brilliant session. We move on to our next session. We're joined by Anindya Malik of Deloitte India. The next sector which is in focus right now is, of course, education. Education sector has been spearheaded by every government. Every government wants to keep education as one of the core sectors. But we moved back a year ago when national education policy was announced, and there was a lot of brouhaha, a lot of conversations going around national education policy. And in this budget, especially the education sector has been kept in focus. There's an announcement of a central university in Leh, National Language Translation Mission. We're joined by Anindya Malik. Anindya, namaskar. How have you been? How are you? How do you rate this budget as far as the education sector is concerned?
Well, Abhinav, first of all, thank you for having me, and I'm fine. Hope you are fine too. So I think that the budget, as expected, the focus, given the pandemic situation and the recovery of the economy, the focus has been on healthcare and infrastructure. But even in the education sector, we see that the national education policy, the finance minister said, has been has been well received. And I think the announcement that she made that 15,000 schools will be strengthened so that they in fact can become the mentor organizations within those regions. So they become representative and mentor schools, so that the transformative changes that the national education policy has in terms of school education, that is transforming from the current 10+2 system to a 15-year system where the introduction is at the preschool level, that is the early childhood education and care, where a completely new pedagogical system involving early childhood learning and conceptual learning in terms of introducing a child to numerology and reading skills. So that becomes important, and in this year that 15,000 schools will be strengthened in terms of having the adequate policies and the infrastructure, and of course the teachers have to be trained. So that also is very important, because as per the policy, for the preschoolers, basically if we go into the rural areas or semi-urban areas, it's the Anganwadi centers which actually deal with children of that age. So that those Anganwadi centers will be either converted, their facilities will be made aligned to the requirement of the preschool thing, along with the training of these teachers and Anganwadi workers. So that is very important. And I think that was the major trust in terms of if we can link the implementation of the national education policies to school. And in terms of the higher education, while there are a number of changes that are required, especially with the flexible options that have been given for a student to choose what kind of subjects they will take, which actually brings a lot of investment requirement in infrastructure of the higher education institutes, bringing in more faculty, because either you'll have to introduce more courses or tie up and partner with other education institutions who can offer the courses should a student want a variation of this, if they want a variation of the subjects that they want to pursue as part of their career. So in this case, we only found that the Higher Education Commission has been called out here, which was already there in the policy, and that will be a kind of a unifying umbrella system where the standardization, accreditation, and fund of financing of your higher education would be done.
You know, Anindya, when this national education policy was launched, we started this IP called the story of your paycheck, where we linked skill development directly to your employment, and how the education policy will it or will it not contribute to employment generation. Now let's take it one by one. Okay, let's start with school education system. Now, of course, everything looks bright on the paper, and I do not doubt the intent of the government. It's a step in the right direction. But what we miss is that 78% of our students, of our kids, they study in government infrastructure. And when it comes to government infrastructure, we have got the deplorable conditions of Shiksha Mitra on ground, non-payment of money on time, funds being diverted in a completely different direction. And what COVID has shown us is the lack of online education in rural and interior parts of India. I mean, majority of the students could not even get access to formal education in the last 1 year. So do you think this budget, of course, there has been an allocation of 50,000 crores to National Research Foundation. And of course, considering the fact that Leh has recently been converted into a state. So there are political nuances what the government has suggested, but when it comes to rural education, we are far behind. Do you think this budget has done justice to the national education policy as far as the rural infrastructure of education is concerned?
For that, we'll have to see what proportion of the 15,000 schools that are there in this budget speech are in the rural areas. So if a proportion of them are in the rural areas, then the benefit of at least implementation of the schools we can see. But I definitely agree with you, because one of the expectations from the budget was that some allocation be made to rectify the digital divide, as we call it, for the economically weaker section. And it's not only in the rural areas, it's also in the urban areas that we see that while schools, even government schools, have gone for online education, but the accessibility of that education has not been there for children of the economically weaker section of society, because they do not have access to device or access to the internet connectivity. So unless through schools or through the government, some financial help was given to them in terms of giving either a tablet or a smartphone to these children so that they could continue with their education. It is, as you said, that for nearly a year they have been outside classroom learning.
Now, this is a part of the school education, Anindya. If we look at higher education as well, okay, and let me break it down for you. It takes around 64 months in India to get a PhD, as opposed to 12 and 24 months in US and UK respectively. Now, when it comes to higher education infrastructure, PhDs, not all of them in a generic sense, but there was this news in the UP government around 4 years ago that ordinary PhDs were applying for the peon jobs in India. Now, do you think the budget has done justice to the higher education infrastructure? I mean, considering the fact that the more we skill education, the more we churn out skilled labor, and skilled labor is the need of the hour.
Well, you see, over the last couple of budgets, allocations have been made towards modernizing the infrastructure of higher education institutes. So one was, of course, through the Institute of Eminence, which was about 2-3 years back, where at least for the public sector higher education institutes, the government committed to pay the 500 crores. And these institutes were the eminent ones where already they had the chance of getting a global rank. They just needed to become more research oriented and all. And then, of course, the National Research Foundation was I think financed about 2-3 budgets back. So that, and we also have a higher education financing corporation with the seed capital having been allocated through, again, budget maybe 2 years back. So I think while the base has been created, the foundation laid, it is about the higher education institutes now coming up with bankable proposals so that they could have access to those funds. But as we said that means India is a large country, huge population, which is, of course, gives us our demographic dividend, as we call it. But it is useful for us only if our youth are educated and skilled, and education is aligned to the jobs or the careers they want to pursue. It's where the quality comes in, and the quality comes in is based on the standard of infrastructure that you have along with the faculty. So
I'm glad you mentioned infrastructure and the standard of quality, because Anindya, what was especially noticeable was that there was this collaboration which the finance minister mentioned today with the government of UAE in allocation of benchmarks and certificates to the skill development and the new skilling graduates who come out. Firstly, where do you see the future of this collaboration? And number two, what could be the possible challenges in the rightful implementation?
So I see that this is very beneficial for our youth, because the UAE and the Middle East are important job markets for them, and obviously that they'll get the job if they're skilled. And since since we are collaborating with them on standards and certifications which they will recognize, so I think it benefits the Indian youth also who are looking at a career in the Middle East, because then they have a much more targeted skill development, and they're not wasting their time, because they know that if they take this certification, and they will definitely get a job there. And for the skill training institutes also, that will give them access to the course curriculum and a more focus on the job training in terms of tool rooms and equipments that they need to invest in. Because right now, I think that while through the Skill India policy, a lot of initiatives have been taken up in skilling, and skill development centers have come up across the country. But there, what we see on the ground is that there is a kind of a disconnect between what industry wants and what are the skills being done. Though the institutional part is fine, because we do have sector skill councils and all who are supposed to guide the skill training institutes into what kind of course curriculum, certification and all. But I think this country to country partnership, which was mentioned for UAE, and also they mentioned that there is already an ongoing program on vocational training between India and Japan. So these initiatives are very good for our youth, and I think it should be encouraged, and we should go on basis of our learnings from these initiatives. We should also look at collaborating with more countries where our talent can be used.
Sure. Now, it's very appeasing, and I'm glad you said that we should reach out to more and more countries in collaborating for a healthier workforce in the future. But from countries, let's talk about companies. Now, India has a specific policy. For example, if a corporate like a Godrej wants to train some students and later hire them in their specific skill set, they are taxed by the government, and the government does not take that as a CSR activity. Okay, now these are very specific pointers which I'm discussing with you. Do you think the finance minister could have made the education policy a little more tangible, especially through the budget? Because right now it's high time that India has the largest unemployed workforce in the world. Our unemployment was highest, 9.1% when I see the December data. Now, do you think that finance minister could have also reached out to corporates in transferring skill sets through a CSR fund, or maybe allocation of or maybe calling training of youth by the corporates and later hiring them, qualifying that as a CSR, could have encouraged more and more corporates also to jump on the bandwagon rather than reaching out to countries at this stage?
No, I think we already have that institutional foundation laid through. You see, the main component of CSR, I think it comes second, is education. So a lot of corporates are using the CSR funds in education, and that includes skill development. And while they can, as CSR means it is for the community, it cannot be for a specific company, because then that becomes training for hiring. So when a company is doing the CSR, generally we find that they do the CSR in a sector where they are already operating. So it is not only building the skills which they will require for their own industry, but it's for the entire sector actually. So from that perspective, I think the focus is already there. And in terms of in the very beginning of the budget, of course, a lot of discussions were there on the unemployment situation given the pandemic. But if you see the kind of budget announcements that have been made in infrastructure, in terms of the roads that were going to come up, and then There's of course the airports and all, where PPPs are being were announced for operating and maintenance. So there will be a requirement of a lot of skilled people, because these will be private sector operators who will be held down to and made accountable to whatever service levels they are signing up for. So they will have to ensure that the people who are there are adequately skilled and they can deliver. So from that, there will be a pull effect in terms of having that skilled, in terms of, it could be in construction, it could be in any other operation maintenance, in like it would be plumbers and other skill sets that are required. So I think that from that they will and using the sector skill councils, in which anyway the companies like you mentioned Godrej, they're anyway part of sector skill councils. So I think that alignment will actually become more coordinated, and it will work the way it's supposed to work. It's not and I don't think that it's much to do with the budget, because these provisions were already there. If you see, it's already there from previous budgets. It's part of our regulations. So it should happen. It's just that the disconnect is there. But once the opportunity is there and there is a requirement, definitely all players or stakeholders will come together and make sure it happens.
मलिक साहब, मैं आपसे सीधी बात करूंगा, 2 ठीक है. अभी जो पिछले 1 साल में हमारी पॉलिसीज रही हैं, जो हमारे नंबर्स रहे हैं, okay, what is established is that we are slowly and steadily creating a very large unemployable workforce, and like you rightly said, there is a gap between what the industry seeks and what our educational institutes teach. My question to you is simple. What could have been done better in this budget as far as the education sector is concerned? Because the finance minister herself said that this is going to be the budget unlike in the last few years, and education and skill development forms a very core fundamental part of restructuring the country's future prospects, right? So what could have been done better in this budget according to you, where we focus on employability? We focus on our youngsters coming out of colleges, getting good jobs, rather than being disoriented as to what they studied in college is of no use in the real life industry. What could have been done better, or should I put it more tangible?
Okay, I think that given the size and population of the youth that we have, and the number of institutions that are required to cater to them, it is very important that investments are made in not only upgrading the institutes that they already exist in, and again I'll say it's in terms of facilities and faculty training, because if you go into the real problem that is there, it is that the teachers who are there are possibly not adequately qualified enough to teach, and that is why the result is the learning outcome is low, and the students who are coming out of the system is not even equipped to take up the jobs which they apply for. And in terms, the companies have to spend a lot of money to train them before they become job ready. So the first thing to do is ensure teacher training is there, at least some sort of standardization is there. While on the other hand, we are also talking about giving autonomy in terms of academic autonomy to our higher education institutes, so that they set up their own course curriculum, and that way they become more aligned to what are the industries in their vicinity, because they're actually, if you look at it, that they are the supplier of the future workforce. So ideally they should come together. So I think over the last couple of years, we know that the allocation to education has been around 3% of GDP, while in developed countries 5 to 6%. And I think before every budget, the expectation is that the allocation should become higher. and then only you have enough money to at least ensure that teachers are adequately trained and facilities are created, and more importantly, that can be monitored. Now, coming to the budget announcement of the Higher Education Commission, which essentially is bringing together the functions of UGC and AICTE, so under one body. And on the other hand, where we are talking about more of autonomy being given to higher education institutes, and the policy also talks about the institutes either being teaching oriented, research oriented. So that kind of segregation is also will be there in the future. So it's all about enabling, facilitating, and then monitoring them. So I think we need to bring in that ecosystem where each stakeholder does what they're supposed to do, or and they need to be monitored and held accountable to that.
But Mr. Malik, do you believe that the budget did not touch the main pain points which were there in the education system? I mean, like you mentioned, the quality of teachers is not up to the mark. The quality of employment is not up to the mark. So although all these measures which have been taken by the finance minister, like forming of Eklavya model, national education policy ke tehet 15,000 school, Leh mein Central University, all these are good on paper, but something could have been done as far as the tangible results are concerned.
Yeah, I think again it depends on the allocation that you can make, and as I said, this being a pandemic year, the focus as expected was more on healthcare and infrastructure.
Why am I saying is healthcare, and after healthcare, the core sector which comes under the when I say re-enabling the fortunes of the countries, reskilling and re-educating its workforce.
Yeah, correct. But before that, the other thing was creating of jobs and reviving the economy, which is where the announcement of the infrastructure projects came, and it is expected
when it comes to infrastructure projects, sir, most of the people who are organized there are unorganized workforce. Here we are talking about the organized workforce who take formal education. My question to you is simple, and I'm not trying to put you in a spot. I'm just trying to have your opinion here.
I understand where you're coming from, but it is also up to the industry to popularize certification, because for industry, if a person A comes who doesn't have a certification but has just learned the work by working, means it's informal kind of training, versus someone who's certified, there is no compensation difference given it's for a construction worker. So that recognition is not there, that a person who comes certified knows more about safety measures. Maybe they could they have knowledge of better technologies or better ways of doing work. Possibly they can do the work in a shorter period of time. So it was also that the employers need to recognize that there is a difference between the person certified and a person not. So once they bring in that differentiation, so those who are not certified, they also have the incentive to either go for a certification, and for that also you have the recognition of prior learning, means someone who's done part of the has done informally taught that themselves, they can just give an exam and get a certificate from any of the skill training, because that's already, that provision is there in the skill policy of India.
It's easier said than done, and that brings me to the last part of this conversation. When we talk about National Research Foundation, a budget of 50,000 crores has been allocated this year. India is amongst the lowest, amongst the budget which we spend on R&D is amongst the lowest when it comes to emerging economies. Now, in this spree of Atmanirbhar Bharat, trying to make our youth independent, our companies more independent, and our job seekers more independent, where do you see the future of National Research Foundation? Number one, apart from allocation of budget, what else should the government do that NRF yields what it is meant for?
I think NRF, and that was the mandate that was given when NRF was announced. is to consolidate all the research and development initiatives that are taking place across various ministries and agencies of the government of India. So once that consolidation happens, then it becomes more controllable, and then of course the research can be more focused to the needs of the country. So essentially, the budget will pay for something which is required for the nation building or nation development. And I think the NRF mandate is just, we'll have to see how it's operationalized and how this budgeted amount is utilized.
Okay, now there is a profile called Chief Innovation Officer in the Ministry of HRD, Dr. Abhay Jere, who's a very knowledgeable and काफी विद्वान आदमी, उनसे हमने बात की थी. Now he also highlighted the lack of research and innovation, especially in the higher institutes. Do you think that allocation of more grants to PhD holders will solve this problem?
Look, it also has to be the PhD, means the PhD process has to be more guided also. So I think what is required is a proper, it has to be an ecosystem where the student who is doing PhD, they are also properly remunerated. And also the first question is that first statement you made on PhD, that it has to be a time-bound process with a mentor and a proper project being there. So I think again it is more about formalizing and having a proper organization around PhD from both the student as well as the mentors and other teachers in that ecosystem, and of course the institute or the research center where the person does the PhD from. So what I'll say, the intent is there, at least let's say a foundation has been made, but of course you have to see how the implementation, and I wouldn't say it's very easy, and it is difficult because of the scale that it has to be done at. While we see that there are pockets of success, is that we have some of the research institutes which are recognized across the globe. But then why aren't the other research institutes or other higher education institutes having research facilities not have come into that level of recognition? So I think that is what we need to revisit and see how best we can make use of these facilities which we already have.
Sure. My last question to you will be on the scale of implementation. Do you think this budget has done justice?
Again, as I said, that this is a year where the priorities were different. So if I look at from the education perspective, the expectation would have been more support for implementing the recommendations of the National Education Policy, because as I said, it's to make large-scale changes, and the transformation that is given require huge amount of sums in terms of going for infrastructure, upgrading facility, and of course teacher training. And even in the policy, the mention was there that the allocation has to be in the range of around 6% for the policy to be implemented.
Sure. Mr. Anindya Malik, thank you so much for your time. It was a pleasure talking to you. And we hope that in the future, education sector gets more due from the finance minister. Thank you.
Sure.
Thank you, Mr. Malik.
Thank you, Abhinav.
Thank you. Thank you so much.
Great being on your show. Thanks.
Thank you so much. Okay, so that was Mr. Anindya Malik, partner at Deloitte India, who possibly told us that still there is a scope of education policy to be implemented in the right direction, considering the fact that budgets have been allocated towards National Research Foundation, collaborations with countries. But what is essentially needed is the right implementation, and that would come only with time. He also mentioned that considering the fact that the last year has been pandemic year, so the focus should have been on healthcare, rightly so. In the coming time, we will see whether education gets its due share or not. We should be joined by Mr. Anand Ramanathan, who is the partner at Deloitte India. The next focus sector is agriculture, and we are waiting for him. And the moment he comes, we will start the show. Hello, Anand. Good evening. Can you hear me? Hello, Anand. Can you hear me?
Hello.
Anand,
Hello. Yes, I can hear you. I can hear you, Abhinav.
Okay, so we are joined by Anand Ramanathan, who's a partner at Deloitte India, and we would be talking about the agriculture sector. Anand, my first question to you. This year, agriculture was more about political motives rather than economic ones. So how do you rate this year's budget as far as the agri and rural economy is concerned? Firstly.
I think it was a good budget from an agri and rural economy standpoint. We, for example, have seen a big thrust on infrastructure, which ultimately has a cascading impact on rural jobs as well as rural income. And hence, we will see consumption growth in rural India. And from an agri standpoint too, we have seen many initiatives being launched, right? Whether it is to look at better loan access or to look at more budgetary allocations for micro irrigation, or to look at diversification of crops to 22 other crops where they're promoting greater levels of investment. And also, if we were to look at MSMEs, quite a few announcements around that, which will also have an impact on rural economies because there are a large number of MSME companies in food processing.
Sure. Now, if we see about the finance minister did allocate numbers कि 2014 में wheat MSP इतना था, 2020 में इतना हो गया. Same goes for paddy. What most of the industry experts are also pointing out that the recent farm protests, okay, what have initiated something called the anti-reform pandemic, because the reforms are always difficult to execute in an environment like this, and especially when the government is on the back foot, that the steps which they are taking, the reforms which they're initiating are politically sensitive. Now, considering the fact that recent farmer protests over the last 2 months, 4 months, how they have fared, how do you see the announcements by the government, be it in the fisheries sector, be it one nation, one ration card, be it allocation of 16.5 lakh crores of credit to the farmers? Where do you see these steps going forward?
Yeah, so there are two things, right? One is the policy announcement, and the second is the change management, which needs to enable all of those policies to be implemented. And hence, if you look at the policy announcements, I think while he spoke about wheat and paddy, there was also mention about pulses, right? And India's food pyramid is diversifying. We are consuming a lot more pulses, oilseeds, horticulture, proteins, and hence, if you look at our green revolution too, a lot of it happened in the procurement states on things like paddy and wheat, right? And therefore, many of these announcements will have an impact on sustainability in terms of diversifying crops, and at the same time provide power to the farmer, support for him to build market linkages in areas beyond just cereals and food grains, right? So I think that was a good announcement, which will try and make this a positive budget for all stakeholders, right? Because ultimately the procurement states will also gain. And when you look at fisheries, it's a complementary source of income. And particularly if you look at the quality of fish imports that happen to other countries from India, I think it is a very important area for capacity building. India does have the right agroclimatic conditions and the right pool of produce which can be exported. So to scale that up and to complement farmers' income, particularly in states around the Coromandel coast, I think is another big initiative which has been announced in this budget. So in all, I think this is a win-win for all. I mean, they need to feel like they've been left out from it.
Okay. Anand, am I audible to you? I think I've lost you.
Yes, you are. Yes,
okay.
Abhinav.
Okay. Now, considering the rural economy into picture, okay, you said that infrastructure spends and more infrastructure development will boost rural employment, which in turn will boost the demand. Now, where does it leave the migrant workers? Do we expect more migrant workers to come back to the city foray or to stay where they are? How do you see economics playing out at the grassroots level, especially after this budget announcement?
Sure. Now, if you look at agriculture, it contributes to less than our economy, but it's about 50% labor force, right? And therefore,
Anand, I think we've lost you. Your audio is fluctuating. Can you start your answer again, please?
Can you hear me now?
Yeah, I think there is some internet fluctuation at your end.
Is it better now? Am I audible?
Yeah, you're audible. Please continue. Start from the beginning. Right. Should I repeat my question for you?
I've got the question, Abhinav. So So now, if I were to look at labor, right? If you look at India's economy, about 15% or less than that comes from agriculture, but about 50% of our employment happens in agriculture. And therefore, it is a form of subsistence agriculture, which is critical for getting people employed. And in some sense, people have also said this is hidden unemployment, right? In the sense that people have nothing else to do, so they go to agriculture. And hence, if I were to look at labor and the availability of labor, despite 50% being dependent on agriculture, we've had some pretty big shortages in different parts of the country from a labor standpoint. So I always think that from a demand supply standpoint, there will always be demand for good quality labor for agriculture. And hence, that is always going to be a viable opportunity, except it might not be very aspirational in the sense that people would want to, for example, work in a retail store, which is air conditioned, rather than do the hard physical work of agriculture. But whoever is willing, there will always be demand for that in rural areas.
Sure. Now, the setting up of rural infra fund and micro irrigation fund of about 40,000 and doubling the micro irrigation fund to 10,000 crores. Where do you see deployment happening? And do you see healthy deployment happening? Or again, this will be just the numbers on the paper, and again, we are back to square one next year?
See, I think irrigation is extremely important. And see, micro irrigation has two components to it, right? One is what you see as the fragmented drip irrigation, which happens in different parts of the country. But also closely linked to this is large lift irrigation projects, which enables micro irrigation to happen. And this is like a large area for infrastructure to be allocated over the next few years. And therefore, if some of this additional allocation can go into large lift irrigation projects to enable micro irrigation, I think India will also benefit from it. We've seen it work in other parts of the world, Brazil, Israel, etc. So can we bring in some of that into the country? So that is one. And second, in terms of deployment, primarily, if you see, drip irrigation is extremely beneficial for areas like horticulture, areas like if we were to look at diversifying into pulses. These are all areas where India has a very high import burden, right? Whether it's pulses or oilseeds. And therefore, if we can focus on drip irrigation as a means to enhance capacity, both on oilseeds as well as horticulture, where we are seeing greater consumption from our urban markets, that would be a game changer for agribusiness.
Okay, fine. Now, because we spoke about micro irrigation funds, do you think the finance minister could have also laid a special concession for agri-based startups? Because a lot of agri startups are coming have been coming in the recent years. Do you think there could have been special announcement made for agri startups in this context, especially when it comes to new techniques in agriculture and productivity of crops?
Sure. So there have been some announcements on startups per se, which will also apply to agri startups in terms of the concessions that they get in the first year of operations. But beyond that, yes, I think technology in agriculture is a very big enabler for productivity. While we saw some announcements on eNAM procurement, they could have extended technology transfer and R&D in the use of technology and digital, particularly on both the supply side in terms of just monitoring the quality of the crop that's been growing, and on the demand side to build better market linkages. So a focused effort on agri startups is definitely an area where we need to see increased focus, and hopefully it happens in the budgets going forward.
Now, when it comes to procurement, okay, and the kind of food we waste, and we waste around 40,000, we waste as much food as much as UK consumes. Now, when it comes to FCI procurement, they are usually known for procuring wheat and paddy, which is largely confined to parts of Punjab and Haryana, and that's where the center of the protests are. Now, when it comes to procurement and effective supply chain, including FCI, will it be beneficial for the government to bring as much, if not in the procurement, at least in the supply chain, getting as much private sector as possible? Or do you think there will be protests on that front as well?
See, if I look at procurement that happens, the Green Revolution did make us self-sufficient, right, from a food grain standpoint. So what will really help right now, and particularly for all of the change management to succeed, is to complement some of the food grain production that happens in these belts with other crops which make it sustainable. If you look at a lot of land has gone fallow because of indirect and indiscriminate use of fertilizers, right? And therefore, can we do something to promote the growth of pulses, for example, which will restore some of that nitrogen back into the soil and make the soil more fertile? And pulses is an area where we are deficient, where as a country we do import a lot, and we want to substitute those imports. Similarly, if I were to look at animal protein, like dairy or even for inland fisheries for that standpoint, these are all areas where we've seen some successes in other parts of the country where the farm production has been complemented by animal husbandry, and through that farmer livelihoods have actually improved. So can we look at complementing some of the strengths that we built through Green Revolution with some of the new age agricultural thinking which needs to come to make us more self-sufficient from a horticulture, pulses, oilseed standpoint, and also look at environmental sustainability. Right? So I think that should be the best approach. It will be a win-win for both sides and help make some of this change happen rather than looking at bringing in a policy where there is more private procurement in food grains.
Sure. Now, I asked this question to the panel in the morning as well. It was on internet and privacy. Now, like you have something like an AMFI in mutual fund industry, the government, when it tried to implement reforms which are economically and logically relevant, it becomes difficult to communicate to a sector which employs almost 50% of the workforce in this country. Now, whatever the government is trying to do, it has the right intent and it is in the right direction when it comes to the 3 farm laws. But the government has not been effectively able to communicate the same to the larger sections of the farming community, especially farmers from the northern part of the country. Do you think that it's high time that we set a strong communication agency like we used to have Chopal in the earlier, I remember when I was a kid, there was this Chopal which used to communicate proper initiatives to the government. Now, I remember ITC launching eChopal as well a couple of years ago. Do you think that there is a strong need for nodal communication agency as far as the agriculture sector is concerned, so that proper communication can be made to the relevant community in their language?
Very valid point. See, there are two parts to all of this, right? There is, like I said, a policy pronouncement, which is very important for addressing some of the traditional problems in agriculture, like productivity, like a poor use of the factors of production, like land, capital, labor, improving farmer livelihoods, etc. But also the change management to just ensure that, firstly, the benefits of whatever is being announced is percolating down to the farmer, and second, they start seeing the benefit for themselves, right? So sometimes when they see that one of their own community farmers, in terms of their brethren, are benefiting from some of these policies, the communication of that makes a big impact for adoption and change management to happen, right? So I definitely think there is a role for better communication. There's also the need to back up the communication with actual results on the ground. So one of the biggest challenges in agriculture is not that people are not aware of what the problems are, but implementing the solution requires heavy coordination between the center and the state, and Correct. It also requires farmer producer organizations to be carried along, right? And this is easier said than done. In a country which is so vast geographically and linguistically, it is better to take a few crops. Normally what we've seen is it's good to take a few crops and then take a few geographies, show the impact there, and then scale it up, right? And therefore, what are going to be those few crops where we're going to make change happen? A lot of lessons. I mean, it's not all that difficult, right? Because in the past, both Green Revolution as well as White Revolution, we've seen that when you take stakeholders along, India can become self-sufficient in areas where traditionally there have been shortages. So the same thing needs to happen, and we need to have a version 2.0 for things like horticulture and pulses and oilseeds and every other area where we want to add more capacity, including areas like dairy and animal protein and fisheries.
Sure. Now, when we talk about doubling or tripling farmers' income, Anand, food wastage forms an essential component of it. We did a documentary on food wastage about 2 years ago, and like I said, we waste as much food as much as UK consumes. Now, can there be a special mechanism set up by the government or maybe involving the private sector? Like there are some few startups like Ninja Cart. Now they source directly from the farmer and give it at an affordable price. Plus they also address some myths like the shape of the potato has nothing to do with its nutrient size. Okay, now these few specific things which a startup does. Do you think it's high time we start addressing the supply chain from the farm to your fork? Can there be an effective supply chain? And if yes, what can be done from the government and the private sector side to enhance it?
Sure, Abhinav. I think this is a very important area. There is an enormous amount of wastage, and a lot of it is because of poor management of logistics, right? So there's been a movement now to go closer to the farm gate. Even if you looked at the announcements made about 6 months back, there was an intention to set up food processing facilities close to where production and cultivation happen. And one of the biggest challenges here has been getting the entire coordination to happen effectively, like I said, between the center and the state, but also within the state for involving the right FPOs to make this change happen on the ground, and to also facilitate. While we've spoken a lot about mandis being more accessible to farmers, in reality, this needs to happen in a way where it is remunerative for the farmer to go and sell to these mandis and sell processable varieties. See, one big challenge in India is also limited availability of information, right? And the right knowledge.
And of variety as well, limited.
Right, so processable varieties, how do we grow and then make it available for that food processing infrastructure? And there are lessons to be learned, right? If you look at Thailand, similar kind of tropical climate, and they've set up large food processing plants close to the farm. But the main reason for success was that they were growing processable varieties, which could be used by all the private sector investment, which you will attract to make it easier for exports also to happen beyond just domestic markets, right? So I were to look at improving the productivity of the agri value chain, primarily by two things. One is, can we have better knowledge dissipation to the farmer on both inputs as well as the crops that they need to grow? And second, can we build the right market linkages for the infrastructure that is now being focused upon from a food processing standpoint?
Sure. Now, this will be the last part of the conversation. Firstly, where do you see the budget today as far as inclusivity is concerned? That's number one. Number two, where do you see the future from here? I mean, will there be a successful implementation of the 3 farm amendments which have been made, which are logically and economically correct in the right earnest? But of course, we come back to square one because there are political factors involved, and of course, there is lack of awareness. Number one. Number two, going from here, where do you see the position of the government? And I would like you to be a little politically incorrect if you can be. Will there be a rightful implementation going ahead?
Sure. So on the first point, yes, the budget has been equitable, right, and it has addressed issues where there is a lot of division. And I think going forward, if we were to look at strategically implementation to happen better, 2 things need to happen. One is we need to start focusing on a few crops which are relevant in particular geographies and look at enabling better coordination between the center and the state and the relevant FPOs for it. So that is one big area which will determine how successful some of these announcements are in terms of making the impact that the 3 farm bills wanted to create. And second, in terms of what can be done to implement this better, I think communication. I think this government has been very successful in various areas from a communication standpoint. So how is it that we can make this linguistically disseminated to different parts of the population sitting in different...
Anand, I'm sorry to interfere you there, but FCI procures at an MSP which is rising consistently year on year. At the same time, the PDS system, the cost has been going down year on year, where they collect wheat and paddy and they distribute it to the people below the poverty line. At the same time, they cannot export. Now, this is a flawed economy. This can be understood even by a first-year commerce student. Now, communicating this to the farming community and, like you said, that executing reforms which are economically and logistically viable have become difficult in a sector which is inundated by political motives. So, going forward, do you think that the implementation will be correct? If yes, how? If no, why?
See, there is enough here. It's a growing pie, right? If you look at agribusiness in India, there is immense opportunity, right? Correct. So while we are traditionally so inefficient and our productivity levels are extremely low, right? And therefore, if we take a few crops, right, just take oilseeds and pulses, right? Why can't we grow capacity there and make a commercially viable proposition which benefits the farmer and private sector play there? Look at milk, and can we apply the same lessons to animal protein? Can we apply the same lessons to fisheries, right? How do we use the cooperative system, the erstwhile cooperative system, which is the farmer producer organization, and build capacity of those FPOs, right? Are they really technologically savvy? Do they have the right organization? Can we start looking at some of these areas which will benefit the farmer and which will also make processable varieties available for private sector play? If you look at crops, supply itself can create demand, right? Because there is so much demand out there, but the right supply doesn't exist, right? So you just put the right supply in place, educate the farmer, get the right inputs in place, and grow processable varieties. Automatically, there will be demand for it. You spoke of players like NinjaCart, etc. Now there is an opportunity to directly supply to the consumer, right? And therefore, many of our cities, for example, if you look at vegetables and fruits, at least vegetables, it's a 200-kilometer radius from the urban center, right? So why can't we have those local level interventions where farmers can make the produce available to the urban catchment? And urban India is like growing so quickly, and there are so many states which are becoming highly urbanized. Just forget exports. Even domestic consumption itself is good enough to take care of the traditional problems that we've had. We just need to have the will and the focus on a few crops, right? Focus on those few crops, have those wins, and once confidence gets set up, then scale it up to other crops and other regions.
That's a very valid point which you're making there, Anand. Now, of course, your last answer intrigued one more question from my side, and after that, we're just closing this conversation. The credit target of 16.5 lakh crores. Now, credit and farmers do not generally go hand in hand, and historically, we have seen a lot of farm suicides because of bad credit or bad loan which they have taken. Announcing a credit target of 16.5 lakh crores is absolutely fine. but what should be done to ensure that this is done in the right earnest scheme of things?
Yeah, so this is a start, right? There has been an outlay which has been made. Now, for this to be implemented effectively, two things need to happen. One is our public sector bank network, right? Is the lifeline of financial services in the country. So how
You're talking about cooperative banks or public sector banks?
Public sector banks itself, just the mainstream public sector banks. How do we have a proper monitoring mechanism to see that all of this gets dispersed, right? So that is one big area. Second is obviously there's an ecosystem of micro lending, which needs to happen through the entire setup that we have on microfinance. So again, this is very geographically dispersed. There are pockets of influence for each of the players. And therefore, how do you get the FPO to work in conjunction with microfinance institutional players, as well as the cooperative banks, to take advantage of these schemes? How will it roll out to specific crops which are relevant to a farmer in a specific geography, right? So next level of policy detailing needs to happen. And this, of course, cannot happen uniformly at the same level and intensity across the country. We need to identify a few states where this can be effectively done. And then in a very focused manner, work together with the public sector banks, the microfinance institutions, as well as the FPOs to make change happen on the ground.
You know, while we speak, Anand, micro lending in the farming community and in the rural community has fallen down by almost 24% year on year. And this is the data, which is the publicly available data. I'm not aware how much of this is like, there's more scope to it. Of course, we are confining ourselves to 24%. So Anand, very valid points. Thank you so much for your time. We hope that the farm bill gets through the eyes of the opposition and the people opposing it, and people understand the economic and logical viability, and we are able to develop a sustained economy, and especially for the farmers, and double their income as soon as possible. Anand Ramanathan, thank you so much for your time. Thank you so much.
Thank you so much, Abhinav. Thank you for having me.
Thank you. Thank you so much. Ladies and gentlemen, we move to the next panel, which is the center of attention over the last 1 year, the healthcare and the pharmaceuticals sector. My very capable colleague Jyotsna Sharma will be moderating it, and I hope Jyotsna is here. Is Jyotsna here? Where is Jyotsna? Okay, okay. Hi Jyotsna, how are you? Can you hear me? Hello, Jyotsna, can you hear me?
Yes, I can hear you. Can you hear me, Abhinav?
Yes, I can hear you. I mean, I think Suchi Ray Deloitte India has also joined. We are waiting 2 more panelists from your...
3 more rather.
3 more. Okay, so we are waiting Arvind Sharma and Harshit. So healthcare sector has been the core focus area over the last 1 year. The budget has been increased. A lot of developments and activities have happened. I leave you in the capable hands of Jyotsna Sharma. Jyotsna, over to you.
Thank you. So while we wait, of course, Abhinav, you're right. We've seen an interesting sort of outcome in the healthcare sector. Today's announcements have given us a boost in the healthcare sector. So let's just wait another 2 minutes. I think I can see Mr. Harshit Jain also trying to connect. Ms. Ray, can you hear me? Am I audible to you?
Yes. Yes, I can hear you. Yeah. Hi, Jyotsna. I can hear you.
Hi.
You're able to hear me?
Yes. So we've got with us Ms. Suchi Ray, partner Deloitte. We've got with us Mr. Arvind Sharma. He is from partner Shardul Amarchand Mangaldas. We're waiting for Mr. Harshit Jain and from Dossere, and we are waiting for Mr. Soumyajit Roy from Emoha. So let's just begin. As you're aware, the sector saw a 137% increase this year with a spend, and we got a spend of 64,000 crore for over 6 years. What are the key highlights, or were the key highlights of the announcements made today? Ms. Ray, would you like to begin?
So definitely, I think there has been an expected increase in the public, increase in the expenditure, and in fact that was the most important recommendation and an ask of the industry, and not only of the industry, but I think as COVID pandemic had actually exposed the less amount of the healthcare facilities in India, and to cover that as well, and this was expected that the increase in the public expenditure is made. India's expenditure has not been even in line with some of the BRICS countries. Even China, Brazil, and others are also much higher than the India expenditure. So it was not only from pandemic perspective, but also otherwise, this was something which was long due. So this one recommendation which was made, I think, by every forum, by every industry expert and consultant, that has been met. So that's a very good sign. However, we also just need to see that, yes, there has been a good allocation that has been made to the COVID injections, the vaccines, which is around 35,000 crores. So, yeah, so that is something. If we reduce that, then the percentage may not be that high. However, considering that, yes, that's also part of the healthcare, I think that allocation was to be made rather than really vaccine cess, which was also something which was spoken. So the good thing is that there is no vaccine cess or the COVID cess that has got really included, which has kind of, in the tax rates have been kept at the same scale as they were. So that's a good thing. That's a good sign, and increase in the focus has been. But if you very closely see, the focus has been more on the infrastructure. The good thing is that once you have an infrastructure, you actually have the channel to supply more and more drugs to the people. So that means people will have more and more healthcare facilities available in the nearby vicinities. I mean, I think we have around 718 districts all across India. And out of that, if 602 districts are getting covered with the hospitals, that's the plan that I think is going to really help in ensuring the healthcare facilities being made available to people at large. Other than that, if I see it from industry perspective or investment perspective, which is automatically the moment you have an infrastructure, you will have people to cater to. It is going to increase in employment. It is going to obviously have the need of having more and more medical devices and the pharmaceutical drugs, which will need to be reached out there. So the important thing is that the supply which was required to the chain which required the hospitals to be there, that has been met by this particular announcement. So that's from my side first.
Right. So can we move to you, Mr. Roy? What are your views on the announcements made today? Some of the key highlights according to you.
Thank you, Jyotsna. So I speak on behalf of more than 110 million elders in this country, and I was looking at the nuances in the budget that 10.55% of the IT returns come from elders, and 0.62% comes from senior citizens. I'm saying that literally about 11.2% of the returns actually comes from senior citizens. And despite the two lines that has been mentioned in the budget about how the 75th year of independence is being celebrated with elders who have been given some amount of relief in terms of exemptions from filing IT returns. The fact is that from a healthcare standpoint, I agree with Shuchi that the focus has been more, the physical infrastructure. Let us ask ourselves, each one of us on the show and otherwise, that has it been the health infrastructure which has helped us during COVID, or has it been the local community? Each of our communities, whether it is the RW associations, whether it is a local government, whether it is a local helpline support systems, it is these systems which has helped us pass through COVID. There is no denial that the supply infrastructure is required, but I think a more balanced view has to be taken where particularly the most vulnerable segment of the healthcare segment, the elders, who have 60 to 70% chronic ailments, 25% morbidities, comorbidities. It is this segment that requires a more holistic, community-based response, and I think that is missing. I think a little bit more focus on geriatric, which is a very large part of the healthcare population. I think that part is missing. So I personally feel, Jyotsna, that while the physical infrastructure augmentation is something that I really applaud the government for taking support, but I think a lot more needs to be done to be able to make it community by community accessible to elders. And at EMOHA, when we look at elders, we see the biggest concern that all of them have is emergency and health. And I think a lot more can be done for our elders in the country.
Right. Mr. Sharma, what about your views? Can we hear from you?
Well, Jyotsna, I think, the outlay has been quite robust and emphasis is in the right direction. The challenges which we constantly face is too much of stress on the healthcare systems in urban areas. So I think the move to strengthen the healthcare infrastructure and systems in rural areas is definitely a welcome measure. Secondly, from a regulatory perspective, or rather from a concerted action perspective, empowering or rather recognizing the role of the National Disease Control Center is an important measure, because then you can have a concerted action in terms of ensuring that various stakeholders across the country receive the benefit of the country's healthcare system. A couple of novel methods like, having mobile healthcare systems or facilities or emergency operation centers. Like, you will recollect that there was a sudden outburst of COVID in the hills in North India, and teams from Delhi had to be rushed. So these kind of measures which are being introduced are the need of the hour. And it's not as if they're just that they will be relevant for COVID. They will be relevant considering the social economic setup that we live in. They will always be relevant. In fact, these may be pilot projects which may become more appropriate in our scheme of things on a going forward basis, right? Increasing the number of beds or critical care centers. Again, we like Sushma was mentioning, we lag very, very behind in terms of comparative healthcare systems, and there is a lot of scope for growth in this sector. So I definitely think that these measures are in the right direction, but there's still a long way to go. We are healthcare destinations for several countries, but that's because of their own limitations, not that we are the best options, but yes, it's a good thing to have. Another thing which I see is that the emphasis on air quality and environment around us and well-being is being spoken of as a concept. In the long run, I see them as having a lasting impact, because if you try and increase the outlay for well-being, the critical healthcare related expenditure will definitely come down. And we have examples, we have learnings, insurance companies are trying to incentivize health people, the premiums are lesser. So you can see the returns already coming in.
Yeah. So, preventive care is something that the finance minister did speak about and touch upon, and that is such an important aspect. How can we strengthen that? What are your views on that? Ms. Ray, how can we sort of ensure that, we have centers that look after or allow for preventive care so that the burden does not move onto the hospitals straight away?
Right. So I think the good thing is that, yes, it was recognized that the root cause of, such diseases is primarily the air, water, and the water sanitation, etc. was spoken. And there have been certain specific, very, very specific, explicit numbers that have been spoken with respect to the supply of water. So all that is pretty welcome, because this was something which is actually the basic need. And if it's not being made available, obviously there is the consequence is bad health, and then the requirement of the healthcare facilities. So it's pretty good that, yes, that has been spoken, that has been kind of, I will say rather has been accepted very, very openly, and the measures will be taken in that direction. More important, I feel, from healthcare perspective is to make the things aware and available. I think there is definitely lack of awareness in people with respect to sometimes the basic things like air, water, etc., waterborne disease, airborne disease, etc. And also even of the healthcare facilities. Like, say, suppose if how many people really know about Ayushman Bharat scheme today? Yeah. A lot of people don't know about it. So, that now the Ayushman Bharat scheme, the empanelment of the number of hospitals in that is pretty less. If that is increased, the awareness is increased, automatically people will be aware of that. Yes, I can actually get the diagnosis done free of cost in the hospitals which are empaneled under Ayushman Bharat scheme. So now those are some of the important things which I believe is linked to the awareness not only of the basic needs of water, air, etc., but also of the facilities available within the vicinity. So that way the communication, more and more awareness campaigns, etc., will surely help in that direction.
So we'll come to you, Mr. Roy. In regards to preventive care, what would you?
I think there's a fundamental, point about Jyotsna, the whole, where is the bottleneck? Is bottleneck capital? Is bottleneck number of infrastructure? So just because if we set up, hospitals across the whole place, will the problem, solve for itself? Yeah. I think the answer is no. We've known this for many years now, that the critical piece in this whole thing is the availability of healthcare workers, talent in terms of doctors and clinical practitioners and so on. And I must again mention that from a digital budget to a digital health system, it is time that it's not just creating this physical infrastructure everywhere, but how do we find a way to have talent pool available streaming into these various infrastructure in different parts of the country, which has a bigger ray of hope. So on one part, I would like to say that when you say prevention, I think it is important to know that large parts of our country, whether it is small tier 2, tier 3 cities, or it is rural areas, just creating a physical infra is not going to help. Just creating a hospital is not going to help. We have so many beds in so many different parts of the country, ICU beds which are not manned, where critical talent is not there, nursing talent is not there. We don't have a very, very good, there's a lot of work happening on skilling, but still so much more to do.
Yeah.
So digital budget to digital health is something which I would say would be the mantra, where how can we, in a year that digital budget got rolled in, can we get digital health to follow? And there is so much work that is happening on, on digital health as well.
Yeah.
Today, if an elder in Emoha is suddenly able to access 550 doctors at any point of time, the elder can be in rural India or urban India, it doesn't matter, but at least has the ability to get that information on a second. The other thing is in holistic health, how can we marry social and other wellness? It's not just physical health. It's not that only when somebody falls ill is when it comes to an intention. Comorbidity is so much that it is better that the biggest challenge, which is loneliness, is addressed. When we are able to stitch social aspects like, how do we able to make them more engaged? How do we keep elders and others more activity oriented? Because the more they are active, the more they're engaged, the more typically for elders, the more they fall chance of being, more healthy. So catching them early on is an important thing. Triangulating between all the various aspects of healthcare and not just, tertiary and secondary care is very important. Yeah. So in our world, preventive does not start, there's a very long pre-tail to it, which starts from awareness, starts from dietary and, social exercising, the right kind of nutrition, all of that. And then comes the physical infrastructure. So the first part is actually relatively easy. And if private and government partner together, I think there is a lot of opportunities with digital health technologies.
True. Mr. Sharma, would you like to add to that?
Sure. So I think, I agree with Mr. Roy. We've learned preventive health care at a cost. When we stepped into the COVID catastrophe, I think we hardly had any PPE kits or any preventive measures, so to say. So the only way was to try and practice social hygiene and social distancing. It's gone a long way. Yeah. So we learned it, and that we've learned it, I think, it can be definitely implemented in other sectors and areas of health concerns as well. And I think the government's measures in terms of recognizing good nutrition and creating awareness, all of them are in the same direction. It's not as if, we are choosing it. It's not a choice. It's a necessary adaptation that we need to make in the context. Otherwise, we don't have the wherewithal, so the infrastructure, the healthcare infrastructure to support a population of more than 1.5 billion, merely by having hospitals and critical care centers. You definitely need to educate and orient them so that they learn to live in a more healthy fashion, so that the overall medical expenditure is less.
Yeah. So if we come to, you touched upon, Mr. Roy, you spoke about digital, and during COVID and during the pandemic, your care was being delivered, through digital in a way that telemedicine became a very core aspect of how we were sort of delivering care. What are your views on how, when we think of digital, people usually think of telemedicine as in just consultation, with a doctor. Could you talk a little bit about what that entire thing entails and what are your views on it going forward?
I'll take a real life example. Literally 48 hours back, one of our elders who, so at Emoha we have, obviously about 3,500 elders who stay in their own home. They don't need to move to a senior citizens facility. They stay in their own home, enjoy all the advantages of staying in their own home, but whose healthcare records are there with us. What does that mean? That means that tomorrow something goes wrong with them in the middle of the night. There is a little bit of an issue, and one of our uncles who stays in Gurgaon, late night had a cardiac issue. Within minutes, he pressed the button on our app. Our responders on the ground immediately got dispatched like a 911 system. We're able to reach within half an hour because we had their address triangulated. We knew who the hospital was, so we were able to inform the hospital. We were able to inform their children in Boston. Everything is happening digitally. The complete health profile was there with us. By the time the family and the elder was wheeled in to the hospital, the ER was informed as to what is the case. At 1 o'clock in the night, he got operated, and today he is hearty, happy. Also enjoying the digital services of engagement and online activities and programs. And that's the power when we stitch various elements of the healthcare fraternity, where I'm saying, healthcare is not just, the consultation. Consultation is one part of it. The fact that we have the records, the fact that predictive analytics, we can say that given family history, this is probably what is happening. The problem here is that we look at a human body from a departmental standpoint, that it's a kidney, it's a heart, it's a brain, but the body is connected, the system is connected. And therefore, if we see all the data coming together in a digital piece, we as an organization are able to tell far better that where is this going towards. And then available choices to the family increases, that they are the hospitals, these are the doctors, these are the second choices, second opinions that you can take all digitally from the comfort of your home. This is all pre. The post is, now that it's diagnosed, what can you do? What are choices in equipment, choices in care plans, again available digitally. So that the monitoring pre and the monitoring post can be done in a systematic manner. Otherwise, a lot gets lost in translation, and that's where that's where trauma happens. That's where people miss out on their medications, and that causes a fast onset of a chronic issue.
Yeah. So, Mr. Sharma, the National Digital Health Mission, of course, a really important aspect. What, according to you, are the key factors that should be kept in mind to make it a success? I mean, of course, a great initiative, but what can be? Yeah.
Well, I think, orientation and access, these will be the key drivers for the success of the digital mission.
Yeah.
If you look into the previous year, all survived on a digital platform, so to say, right? And we were able to consult the best of doctors. Rural India has drastically benefited. Whilst mobility was challenged, access was always there, and we were able to do our routine processes and seek consultations, including mental counseling on account of the trauma that pandemic has brought to many people. So it is having a great impact. We've had the tectonic shift in terms of seeing a digital revolution penetrating into our lives. And I'm sure that if people know how to use this service, it is very affordable and it is on your digital platforms. It's bound to be accepted, and the results have to come. It may take a few years. We will get to it, but I think it is a great thing which happened in recent times.
Ms. Ray, would you like to add something to that?
So, the budget did announce one particular scheme, which is on expansion of the integrated health information portal to all the states and the union territories to connect all the public health labs, etc. So while it seems that yes, there is a focus, there is an aim towards making most of the things digital, even in healthcare space. I think much more is required to be done at ground level to make it available. And again, it comes back to the same thing: education and awareness. I mean, you can have the platforms available, but are people ready to use, and are people, people are using it or not? So from that perspective, but definitely I think healthcare has got lot of potential to make it digital. As Mr. Roy was saying, it's not only about really maintaining, doing telemedicine or really keeping healthcare records, but it's actually the entire end-to-end supply chain of really the treatment specifically. I'm not really talking about the supply chain of a supply of medical equipments, etc., but the entire chain can actually be monitored, which gives then comfort to either the people who are are not there with their loved ones, or otherwise people who actually require the healthcare facilities but are not aware of certain things. So, but definitely I think education and awareness, these two things are very essential, because in rural India, then possibly that kind of digitization may not be required. It's more of telemedicine, and the other things may be more important. So it will again depend upon the different levels of digitizations for different sectors of population.
All right. So, sorry, did you want to say something, Mr. Roy?
I was just wanting to add to what Shuchi was saying, that there is not, most hospitals in this country don't have a longitudinal data of a patient, forget an elder. And what that means is that having the full records, because people go to multiple hospitals, people go to multiple pharmacies, and therefore the government's program towards having a unified health system is something which is absolutely the steps in the right direction. But the power of having all of this stitched in a digital way and being available to not just the patient and the family, but also to the doctor is absolutely crazy. And I think that is where the partnership between, we keep saying what can the government do? I would urge us to say what can organizations, startups like us, do, because we are not waiting for government. In our case, for example, because everything is stitched, we are representing the elder and their family, and therefore all their health data is there with us, and that helps. The power of having the whole data is uncompromisable, because you can actually understand that on a social interaction that maybe uncle is not feeling well, and if there's 2 days uncle is not feeling well and it's a cardiac patient or it's a kidney patient, small little steps can lead to a much larger both an expense and also a potential human loss. So the partnership opportunities that are there available today of having healthcare physical infrastructure, healthcare digital infrastructure together along with startups, I think is a mammoth possibility, and I think efforts in that direction also should be encouraged if we can do that. I don't see anything happening on that side, but those are massive opportunities where smaller organizations can play a larger role.
Yeah, so, I think something to do with maybe, what I was expecting is that some more announcements around public-private collaboration. Whether in the field of research and development, whether in the field of healthcare, making healthcare facilities, infrastructure available. Like even when we are speaking on the hospitals and the establishment of various hospitals in many districts, there's not much discussion on how the private sector will really help. Yeah. So the pace at which then this infrastructure is going to be built and all that, I think the implementation now of this, even if we have now got this in the budget, the implementation of that with possibly collaboration with the private sector is actually going to be the key, I believe. Yeah. While the announcements are in the right direction.
Yeah. So while you're saying that the announcements are in the right direction, there are certain aspects that require a little bit more sort of focus. So, Mr. Sharma, I think I'm going to have to wrap up very soon, but I'd like all of you to sort of just one more I'll go around. Mr. Sharma, we'll start with you. What, according to you, say 2 aspects that you think were overlooked or could have been given more of a focus in the announcements and budget allocation today?
Sure. I think, the emphasis on the digital service being provided in the healthcare sector, that clearly needs to be leveraged. I mean, you need to bring out the relevance and importance of this particular game-changing element, right? It has played a huge role in recent times, so why not capitalize on that learning? Secondly, like Suchi and Samit just mentioned, the role of PPP, we've seen the success almost in each and every sector where the government was single-handedly driving the development progress in each of those sectors. So we have somewhere, not recognized their capability to contribute to the sector. When private entrepreneurs get into a segment, there's competition and ultimately the stakeholders and consumers benefit. So I think these are things which definitely need to be looked into.
Right. Mr. Roy?
So I am very biased. I would be very honest that I am a little disappointed with the fact that there is hardly any mention about elders who not only constitute 60 to 70% of the healthcare burden in some ways of what we go through our elders. And barring a small, a little line about having no IT returns to be filed by,
over 75 years.
I was expecting much, much more. So I'll be very honest, I'm a little disappointed. I think elders in this country in a year that has been the most difficult year for elders could have got much, much more. And that could be from getting a complete exemption from tax to getting complete, kind of better access and so on and so forth. So on a positive note, I think the fact that there is more infrastructure that is getting created on the health will definitely be helpful. But I definitely see the need for a very, very, very zero-based thought process of literally 10% of the population going to become 20% of the population, owning up 60 to 70% of the the health challenges of the country, being given a very, very fresh look. But I agree with Mr. Sharma that the power of stitching digital startups and cooperating and planning along with them can open up this world, because it's not, you can't create a doctor overnight. You can create a hospital in 7 days in China, but it takes, it still takes 10 years to create a good doctor, right? So how do you build the right kind of infrastructure? How do you give access through digital technology so that more number of people in disparate parts of the country can get access to that healthcare skill set? I think that is the key part, and anything which promotes that, from tax savings to incentives to partnerships, I think is a welcome move.
Right. Ms. Ray?
Yeah, very quickly, maybe I think from infrastructure will be there, but one is public-private partnership. I think some announcements around that, and some encouragement to the private sector in terms of some better tax incentives, whether from R&D, whether there was a lot of recommendation of making the healthcare facilities as zero rating GST, which would have actually helped the facilities more affordable in the hands of the consumers, the patients, as well as some recommendations vis-a-vis the GST for the life-saving drugs, the reduced rate of GST. I think those were some of the very, very obvious and kind of quick boost to the industry, but we could not see any. So I think the focus has been significantly on infrastructure, and let's see, it's more futuristic than tackling immediate present. So therefore, the implementation is really going to be the key, that how quickly then we are able to implement what we have announced in this budget.
Right. So thank you so much. Thank you all for joining me. This was really good. So all in all, off to a good start, but very important points raised, and I hope that something comes out of that very soon, and we see that, like you said, implementation is the key. So let's see now. All eyes will be on it. So
yes,
thank you. Over to you, Abhinav.
Thank you, Jyotsna.
Thank you.
Thank you.
Thank you, Samajit. Thank you, Suchi. This was an extensive session on healthcare. Healthcare has been the focus of the government over the last 1 year. And not only of the Indian government, but across the world, although there were expectations of a smart data card as well. Many critics were opining, like the Aadhaar, there would be a possibility of smart Aadhaar card, health Aadhaar card, but yeah, that doesn't happen. So thank you, guys. Thank you, Jyotsna. Thank you. This was a very effective session. Moving on, we have...
Thank you, Abhinav. Thank you, Jyotsna.
Thank you so much. Thank you. Moving on, we have Mr. Akhil Gupta, Vice Chairman of Bharti Enterprises, joining us.
Hello.
Hello, Mr. Akhil. How are you, sir?
How are you?
I'm trying to be better with time. What about you?
We're all trying that.
How are you? कैसा है आज का दिन आपका? आपका दिन आज का कैसा रहा?
I think it was very good.
How would you rate, as an industry leader, sir, how would you rate today's budget and what the finance minister said? Overall, what is your assessment of the union budget today?
Well, my assessment is that, this budget can be summed up in two major parts.
Okay.
The first one I would say is it's a bold and fearless budget, because the finance minister has not tried to be fearful that the deficit will be high, and that is why she has not cut down on any expenditure. She has not tried to raise some funny kind of taxes, COVID tax, this tax, that tax, wealth tax, as was being feared. And with the result that she was not afraid of a big fiscal deficit. Just to get an idea, in a very, very bad year, it was 9.5%. Here she is looking at 6.8%, which could be actually even higher than that. And if you were to look at the figures, which is very relevant, this year the projected or the budgeted fiscal deficit 15.06 lakh crores. In 1920, which was the pre-COVID, it was 9.33 lakh crores. So that's a big jump. And that is, I think, the first thing. That's a very bold budget where she has not really cut down on the capital outlay, whether it's for revenue expenses or for the capital expenditure, mainly, of course, infrastructure and other vital items like health, etc. The second piece, which I was very impressed and I, because of that, rated very highly, is that this is a rare budget where the FM has not been tempted to take incremental steps. She has gone for exponential steps. And let me, give you a few items in that which rank very high on my list. So first is she has given good outlays for health, for education, infrastructure. These were expected and these were very necessary. But more important, if you look at big announcements, big steps being taken. These are transformational steps to my mind. Number one, disinvestments. Now, 1,75,000 crore target may be very high, but that's beside the point. What is more important is 2 public sector banks are to be disinvested, privatized. 1 general insurance company is to be privatized. And LIC, which has been the holy grail, is the IPO is going to be done this year.
And Air India as well.
Sorry?
Air India, public sector enterprise.
Well, Air India has been on the card, so I won't call that transformational, but these 3 are transformational. The second one is on stressed assets. Formation of this ARC come AMC or AIF. I think this would be an important step. It's transformational because there is a recognition by the FM that something has got to be done about stressed assets.
Sure.
FDI in insurance, again, an indication of things to come. These are the new age reforms which are happening. The fear that things must be within Indian control and all, I think gradually it's being realized. Insurance is a sector where you can go to 74%. One small but very important item, which I think has escaped most people's attention, is the vehicle scrap policy.
Yes.
Which has introduced. And to my mind, on a long-term basis, that augurs so well for auto sector. It's being done under the head, the pillar of health, but I think the ramification it has on the industry is hugely positive.
Correct.
And finally, the ease of doing business, the e-courts under IBC, ITAT, income tax appellate tribunals becoming faceless, and the reopening of income tax assessments restricted to 3 years versus 6 earlier. I think these are all steps in the right direction.
Mr. Gupta, one important aspect, of course, you mentioned the 2 broad classifications you have in mind, but one important aspect is increased spends on infrastructure and especially the rural economy. Now, government has enhanced the FDI limit in the insurance sector because they will be seeking more funds from the banks and mutual funds to finance these infrastructure projects. Do you think the finance minister had demand surge in mind? Because the root cause of the low income economy is low demand as of now. So do you think the steps which have been taken had surge in demand as the common cause?
That's right. Without a doubt, I think on a macro basis, growth is what lies underneath this budget, and growth comes from demand.
Sure.
And growth comes from investment. So these are all interlinked. If there is demand, there will be investment. If there is investment and there is demand, there will be growth. Growth means more jobs and so on. So more GST, more revenue. I think it's all interlinked. And it was very clear that if India is to get out of this situation like the rest of the world, the only way is creating demand. And the only way for doing that is providing investment opportunities and actual investment whereby the demand will come.
Sure. Now, if I talk specifically to your sector, so telecom, not many great announcements except some adjustment in the revenues. Are you disappointed with the way the finance minister handled the telecom sector?
No. I don't think telecom sector would have really expected much in the budget, because I don't think it would have been practical for most industries to expect a lot of reduction in tariffs or reduction in taxes or levies. I don't think the finance minister had the luxury of doing that.
I think before the budget, there were several announcements by a few industry leaders in reducing the GST on the license fee because of the gross adjusted revenue. There's a lot of stress on the telecom sector right now.
Yeah, I agree. That should have been done, but I don't think that is a part necessarily of the budget alone. It can be done over a period of time.
Okay.
And I think we need to be just conscious of the fact that telecom does provide revenue to the government, and therefore any steps to reduce that revenue will have to be taken a little cautiously by the government.
Sure. Now, one important aspect which everybody is talking about, government missed on, is internet and privacy. The laws on internet and privacy, and that again brings a lot of telecom players into question. Do you think privacy laws could have been given due attention by the government this year? Because a lot of privacy hindrances have happened in the past 1 year, and 59 Chinese apps being banned, recent WhatsApp and Facebook controversy. Do you think internet and privacy, or maybe a introduction of a data regulator, could have gotten FM's attention? They could have introduced a forming of a data regulator this year.
I'm not very sure whether that is within the ambit of a budget exercise, because to say that security concerns of the nation, the privacy concern, the data regulator, I don't personally think that these fall within the ambit of a budget discussion, because let's not forget, government has to work 365 days a year. It's not just on the budget day. That
why I was insisting on the FM was because a data regulator needs funds, the building, the allocation, the formation of a regulator, all this requires funds, and usually the finance minister is the one to allocate funds towards a new activity.
Yeah, but that's too minor. These things the government can do anytime. And they don't. That's what I said. She has not made incremental announcements. To me, this would have been an incremental announcement as far as capital layout is concerned. That wasn't too important. But I'm sure data privacy and safety and cyber security are topmost on their mind and are being worked separately.
Sure. Now, some government vehicles like Air India, which could not be sold in the last few years, a prime reason was non-involvement of special purpose vehicles. Now, government wanted to keep all the best assets of Air India within itself, but wanted to liquidate and sell all the loss-making entities. Do you think government would modify its stance in the coming years and give a preferential treatment to the other divestments, or maybe LIC for that matter? They would also want to sell the good assets and not just the burdened assets to the private sector.
No, I think if you're referring to the fact that in most of the disinvestments, government keeps back some of the land bank, that really doesn't affect the disinvestment to my mind.
No, sir, I'm saying they keep the best assets. So for Air India, they kept the engineering and the hotel division with themselves, but they allowed the loss-making entities to be sold to the private sector.
So I don't think SPVs are going to help in that. It's a matter of mindset. You have got to sell the going concern as it is, with the only exception that maybe some of the land parcels can be taken out.
Sure.
One part. The second and most important part is there must be complete control being passed on to the bidder. Because that becomes a big problem if still government has some part of the control. Like in some of the current disinvestments, I think if the government was to make a clean chit and say, here is the control being passed on to you without a question, these things will attract more interest.
Sure. Now, considering the other prime sectors of the economy for, say, healthcare, education, banking and financial services, do you think the government did prime justice in allocating extra budgets and relieving sectors like introduction of FDI? These reforms will go a long way in establishing a credible position of the Indian economy.
I think so. I think so. On all these sectors which you mentioned, education and health and so on, I think there is enough. I think that's a wrong word because there can be never enough on these sectors. India needs much, much, much more. But given the circumstances, I think she did whatever she could.
Sure.
One sector definitely I feel a bit concerned is defense.
Okay.
The expenditure on defense looks pretty low to me as compared to what we had seen. Like it's about 3.47 lakhs versus even 3.19 or 3.2 lakhs in 1920. So that may, looking at our situation, may require to be stepped up, which could increase the fiscal deficit.
Okay. Now, considering the fact the overall view of economy, sir, when it comes to allocation of stressed assets, do you think the government has done right in dealing with the NPAs?
I don't know, because it will depend really on what kind of a shape does that ARC or AIF. It's a broad announcement. But what is more important is the fact that right at the finance ministry and the FM level, there is a recognition that these stressed assets of the public sector banks have got to be dealt with by taking them out of that system so that the banks can become healthy and these can be dealt with a separate focus.
Okay.
So I think we will wait and watch as to what structure emerges to deal with these stressed assets.
Sure. Now, there was this conversation with the chief economic advisor, Mr. K.V. Subramaniam, and a lot of industrialists pointed out that post-pandemic, there's a surge of anti-reform pandemic coming not only from the opposition, but also from the consensus within the society, like recent example being farm laws. Do you think to implement economic and logically viable reforms, the government needs to play a little more bold, or are they on the back foot considering the recent farm laws agitation? What is the way forward as far as reformative agendas in the economy are concerned?
There's no way government can be on the back foot. I think the country needs reforms on many fronts.
Sure.
The only thing is, I think it has got to be a more consultative process.
Okay. So do you think that the government leads a strong nodal communication agency?
Well, I mean...
Which, like AMFI, there's AMFI for mutual funds. Do you think that the government needs something which generates 2% of their budget to awareness generation? Do you think government needs a strong nodal communication?
Necessary. I think it's just that if there is more consultation, which, by the way, a lot of industries have a lot of consultation, like telecom industry. Every time TRA comes out with something, there is a consultative paper. I think those processes are just need to be built in whatever manner.
Sure. Now, what according to you better could have been done in today's budget in specific sectors?
Well, look, as I said, I will not want to get into any incremental thing. There are many things which each industry would have wanted as concessions. Similarly, there would have been pressures within finance ministry to increase taxes on many fronts. And I think a good compromise, perhaps the best compromise could have been that the taxation bit or the taxes bit, let's put it on the status quo and let's focus on investments.
Sure. Now, coming back to your sector, sir. Now, the debt-laden telecom sector faces blockages of capital in the form of GST input tax credits.
Yeah.
Like they were seeking somewhere around 35,000 crores from the government. Do you think government should have addressed this concern at this point in time, considering there are upcoming auctions coming, and the telecom sector is already dealing with a lot of, it's already bleeding?
You're right. I'm sure it's a very genuine concern of the industry. These are the unutilized GST credits, which the industry has actually already paid for. All it is saying is that against the current demands or the future demands, we start adjusting this. So I'm sure the GST Council and the Finance Ministry can take this issue up separately as well.
Okay. And what about the minimum alternate tax, the extension and the limit extension of the limitation of time? Do you think the finance minister could have addressed that?
But I believe companies can offer 25% tax or MAT. So most of the companies, I think, will get out of MAT.
Okay. Now, this would be the last part of my conversation, sir. The COI, the Cellular Operations Association of India, they had asked for a reduction in license fees and SUC levies recently. Now, presently, there are two components to 8% license fee. One is Universal Service Obligation Fund of 5% and license fee of 3%. COI had urged not only the Department of Telecom, but also the Finance Minister to reduce license fees from 3% to 1%. Do you think, firstly, that was a justified demand? And secondly, do you think the Finance Minister should have addressed it irrespective?
Well, I think definitely it's a justified demand. If you look at USA of 5%, for instance, there is I'm forgetting the figure, there's a very large amount of some 22,000 crore or something lying with USO already, which is unutilized. Therefore, the justification of carrying on with it is no longer there. Now, again, I'll come back to this. Should she have addressed it in the budget? Ideally, yes. But then we are not in an ideal situation, as we all know. I'm sure it will be unfair for me to say that our industry has been wrong, because I'm sure many other industries would be having similar kind of concessional demands, and it may not have been practically possible to address all of them. Yes, but there will be disappointments on some of these matters, like you have pointed out for telecom. I'm sure many other industries would have some disappointments.
Now, so the COVID-19 had thrown up a lot of challenges. The telecom operators were also pushed back, and there is an increased demand to increase the network resiliency and reliability to deal with increasing data usage. What better can be done? What would be your demand from the finance minister going forward to have some relieved relevance for the telecom sector?
Well, I think the biggest thing which, leaving aside all the demand for reduction of levies and all this, is natural. It's a vital industry. Most important is that for resilience and for taking broadband to everybody, you need investments in the sector. You need to invest for 5G going forward. Therefore, the best thing which government can do is to reduce the reserve price on spectrum.
Okay.
And
Now
allow
we're
the
talking.
operators to invest more on the network side. This is not affecting the current revenue, because this is future revenue. But what they should aim for is getting revenue on a recurring basis from the revenue which will be earned, rather than taking it as a big, huge one-time payment, which makes the industry sick.
Now, sir, it's very difficult to get hold of you now, since I've gotten you a question not relevant to the budget, but over pending reform in the telecom sector is the applicable of same laws to the OTT players as much to the telecom. Like OTT players have eaten in the share of the messaging services, players like WhatsApp. So do you expect any regulation going forward?
Look, I think industry matter. Let COI answer all this. All I would say is, whether it is telecom or whether it is any other industry, the prime need for a civilized, progressive country like India is to have level playing fields for everybody.
Okay.
And within that, telecom operators, OTTs, anybody else, they all need to have a level playing field. So if one has to pay for license fee and spectrum, the others also should have to pay, and vice versa. So I think the level playing field is a much bigger concept which has place for every industry, not just telecom.
And so far, you believe that OTT players have not been on a level playing field with the telecom players?
Well, so far they have not been using the spectrum. And therefore, they are providing a service. Now, whether that service should be taxed or not, I can't say. But they go on our network. We do earn revenue from those services. So it's not that telecom operators are not gaining from OTTs. We are also gaining because they produce the traffic. But if there are proposals to give spectrum free of charge, that would be non-level playing field.
Sure. Then do you see consolidation of the OTT and the telecom players going forward? Services consolidation?
I have no idea. It doesn't look like at this point. But some of the OTTs are just too big. And so I don't see them getting into telecom. But these will be very complementary to each other.
Sure. Now, departing thoughts from you, Mr. Gupta, if you meet the finance minister in the evening, what would be your advice to her and what would you congratulate her on?
Well, I'll congratulate her on being exponential and being very bold and fearless and not let the fear of fiscal deficit having weighed down on her head. I think that's the best thing she could have done for India today. My one point of advice would be that since the government would always have limitation into how much you can invest in infrastructure, one thing she should seriously consider going forward is to use the sovereign guarantees to encourage private sector to come into infrastructure projects, guarantee the loans till the projects attain a certain level, just like they have done for MSMEs and others during the COVID period. They have provided those sovereign guarantees to banks for extending loans to these sectors. I think that would help in ensuring that there is big investment coming in infrastructure. There will be lenders who will be willing to lend on the basis that till such time that these projects achieve a certain level or a certain milestone, there is a sovereign guarantee.
Sure. Now, I would like to just take one more question from the audience for you, sir. Do you expect telecom tariff wars to surge after the 5G launch or post the 5G launch?
No, 5G launch would have no.
And will it hurt? And will it hurt the 5G launch in India?
No. I think this question has a more fundamental answer, and that answer is that it's very clear that for telecom, which is a very, very vital sector. I mean, this country or the world would have collapsed if there was no telecommunication sound networks. It needs constant investment, massive investments.
It's a heavy capital intensive sector.
The capital intensive sector. And therefore the financial health of the sector is very important. And in India, where the tariffs are, just pathetically low, just to give you an idea, our data traffic rates, tariffs are about 12 to 13 US cents per GB. In US, it is $12 per GB. In UK, it is $6.50 per GB.
Yeah, we have the lowest tariff rates in the world.
There we are, 12 to 13 cents versus $12 and $6. So,
but so the per capita income of US and UK is much more than India.
Therefore, I'm not saying it should go to 6. Should it go to 50 cents, 40 cents? Definitely there is a case. But definitely, if this industry is to be healthy, I think the tariffs overall and the ARPUs overall will have to increase.
Okay.
And so that is something on a long-term basis, it must happen.
So do you expect more regulation from your competitor towards your competitor?
No, competitors don't create regulation. That's what TRAI do.
No, take it. Thank you. Thank you so much, Mr. Gupta, for your time. This was really insightful. We hope the finance minister listens to what you have to say. Thank you so much, Mr. Gupta. Thank you so much for your time. We move on to the next session. I'm joined by Soumya Sehgal. Soumya, hi, how are you?
I'm good. How are you?
I'm good. How did the media sector fare? How was the budget for you? Any special inputs you have for the budget? And I hope your panelist will be joining in some time. She's here.
She's here. Hi, Divya ma'am. How are you?
Hi. Hi, guys.
Yeah, hi.
Good to see you.
Hi, Divya. So Divya Karani is the CEO of Dentsu X, and I'm joined by Soumya Sehgal, who is a principal correspondent for Business World. Soumya, over to you, and I will be seeing you soon. Bye-bye.
Yes, bye.
Bye. I have a backdrop which you may want me to change. Do you want me to change or are we good?
Ma'am, anything that works for you. I think you'll have to change that. And you
live. Just yes, I'm live. So I'm asking and I'm smiling as we speak because in today's day and age, You jump from one meeting to another. Just give me a minute and you'll have to bear up with me. I'm just going to change. Just give me a minute. Beta, मुझे change करना है background.
Okay, there was something wrong with the background?
Yeah, she's getting it fixed.
Okay.
Background change करना है. Background कैसे change करूँ?
I think it's fine. You can just go ahead with it.
There was some jury award thing at the background.
Okay.
But I think I can begin with my introduction and everything.
Yes, please go ahead.
You know?
आपको ये भी नहीं मालूम है.
Divya ma'am, it's fine. You can come back.
Okay, guys. So my apologies for this backdrop. But there it is.
That's fine. It's the thoughts that matter today, ma'am. That's fine.
Thank you.
Okay, so we all know that 2021 was a year that was being looked upon as a year of hope for good health, hope for a life free of restrictions, and of course buoyancy in economy. While various economic packages and reforms announced by the government in 2020 kept the economy afloat, 21's budget was definitely being looked upon as a watershed event that would ultimately give some impetus to the economy. And in my opinion, it rightly did. Today's budget was indeed an excellent balancing act by the government. To take this conversation forward, as you all may know by now, I have with me a stalwart from the Indian media industry, Ms. Divya Karani, CEO, Dentsu X, who will share her observations on a budget built under circumstances like never before. Very warm welcome to you, ma'am.
Soumya, I'm so sorry, I'll have to intervene you in between. Divya, you can't use that background. I'm so sorry, I've just been instructed by the backend team. So you can not use a background, that would be fine.
Yeah.
Okay.
If you don't use a background, that's okay.
Which is what I was trying to remove, and I was very conscious of holding everyone up. So, okay.
So it would be absolutely fine if you don't have a background. We can get used to.
If you could just help her, Abhinav.
I can't because
that background.
Need help.
Yeah, I think it's in the video, this arrow button that you remove it.
आपको मालूम है? Choose background.
Appearance.
None. Yeah, we are good. Okay.
perfect.
Yeah, much better.
Okay, time for me to leave. Thank you.
Okay, so ma'am, very warm welcome to you.
Thank you.
Let me begin with asking you, what is your view on the overall budget announced today? Do you think most of it was well expected?
It exceeded expectations. It exceeded expectations. I think there was a general feeling that, it would be a positive budget, but I think the budget has exceeded that. And to my mind, take a look at our Sensex. That in itself will tell you it's clocked the highest single day gain in the past 10 months.
Yes.
So it has exceeded expectations. Facets of it, pro-tech, pro-growth, disinvestment where required, re-energizing infrastructure, healthcare, banking, agriculture sector. So in very many ways, it's progressive. And if I have to sum it all up, I find it very practical, rational, and progressive. So it's exceeded expectations, and I think we are good for it. Good map going forward.
Can we call it the budget for growth?
Of course, most certainly. And that is what I think, as you well know, Sensex looks to forward earnings. So, of course, it is something that, she's addressed quite a few parts that will help us, of course, given the constraints that are there. So we mentioned healthcare. infrastructure, financial sector. What I love particularly is, as far as taxpayers are concerned, just think it through. She's avoided the pitfalls of tinkering around with the taxes. It stayed as is. Often, sometimes I find that, tinkering may be done for tinkering's sake. That has been avoided. It has stayed the course, and at the same time provided a boost to both capex as well as infra spend in the economy. So it is a budget for growth.
Right. And, ma'am, what kind of impacts can we expect in the media industry?
Very, very positive. The media industry it's vulnerable. You see, our GDP and the advertising industry, and therefore the media industry, which is an integral part of the advertising industry, there is complete and absolute correlation as is expected. Nation grows, ADEX grows. Anyway, in India, our ADEX ratio to GDP is extremely low. So there is a lot of the good positive way of looking at it is there is a huge headroom for growth. And increasingly media particularly is making the pivotal difference in people's lives. And therefore, a progressive budget, a nation growing, business growing is very healthy for media as well. Yes, there is a lag effect that happens, but that is expected. Yes, across sectors, the impact varies. That is also, expected. So given all that, it is very positive for media.
Right.
And to our larger communication industry as well.
Right. And ma'am, do you feel this will help the media industry reach the $30 billion mark by 2030?
Samya, the days of doing a 5-year plan is out of the window. The days of doing a 3-year plan, if COVID has not taught us that, then what else will? So to my mind, 2030 is a long, long, long way away. We've learned that even in stitching up, while we do a 3-year plan and we stitch up an annual plan, there are so many moving parts that are involved that I think our calibration of time itself may need to change. But having said that, I mentioned earlier that India, there's a lot of headroom for growth. So everything being what is for the next 1 decade, yes, we are poised for growth. Yes. But I would caution again doing, a 10-year projection.
Right. And ma'am, as they say, wherever the economy does well, the advertising industry also benefits from it. So ma'am, do you have any sector-wise advices or observations that you foresee from this budget? Say, for example, the news industry or how the broadcast will perhaps perform? Any observations on particular sectors, maybe?
So, a caution, we media practitioners, or rather we advertising practitioners, tend to put media in silos. But the way consumption happens is without silos. And therefore, we tend to look at newsprint in a separate bucket. We then look at digital in a separate bucket. We then look at TV in a separate bucket. Take something like news brands, for example. How and where will you begin to class? News, for example, transcends newsprint, transcends television, transcends digital, right? And consumers consume news across all 3 platforms in a seamless way, and each one has morphed to make way for the other. So which sectors will benefit? Yes, we all know COVID not only has changed media consumption, but it has changed how consumers consume media. So notice the narrative, instead of it being an industry looking inward, we are keeping the consumer at the center and how media is consumed. If you look at it from that perspective, news brands will continue to hold their own across platforms, in terms of platform and entertainment as well, will continue. Third, in terms of platforms, you will find that digital, of the huge penetration is here to stay, penetration and adoption. And now it's become almost a part of our life. So last year has accelerated that. And I think that accelerated growth is here to stay. And budget in very many ways will fuel that as well. Cut to our TV, print, and when I again say TV, it is video and across platforms, entertainment rather, is here to stay and has long legs to go. So right across sectors, even for that matter, out of home and cinema, which has received a huge setback last year. But the moment you look at out of home as beyond a static hoarding to a digital experience, you will find that, the whole landscape changes, and that also has legs. So looked at it from a consumer perspective, I would imagine that all media and platforms will coexist and all have a place under the sun and all have growth potential across the board, some more than others.
I totally second you on that, ma'am. But talking of digital in particular, we know digital is the future, and this paperless budget was one example of a digital India. What is your opinion on the digital of the future, or digital in the coming 2-3 years? Where do you think it will, how will it reach its destination? What is its destination in the next 2-3 years?
It is poised. So again, then as going back to our practitioners' way of putting it as digital, television, radio, if we want to continue with that narrative, then of course it is registering the highest growth, because it is becoming a part of the consumer's life, as well as its base is relatively smaller. So I would predict that digital will be the most important share in the media mix going forward. It may happen, it will not happen tomorrow. It may take a couple of years, but there will be digital, looked at it from the earlier old-fashioned lens, and then there will be television and then other media.
Right.
But I'm cautioning that our earlier habit of putting it in those buckets.
Right. And do you think FM could have lower taxes on the digital advertising?
Give it time. There is no. Of course, your digital champions would want it so. I would imagine that it doesn't need additional impetus to grow. It's already growing. Because something has to give somewhere. You're talking to a media practitioner. Just remember, there is finite money. So you put something somewhere, something else has to give.
Right.
So I think the FM has balanced this budget. If there was one word to describe, it's a very well-balanced budget.
I agree. Yes, ma'am. Now we have one question from the audience. So while there was no direct benefit for the broadcasting sector, the focus on privatization and providing support for startups and innovation is likely to benefit the overall corporate sector and in turn help the media and entertainment industry, as it might lead to strong advertising growth. Do you think this theory can be true?
Yes, I would imagine, this impetus to, you mentioned startups and so on, would transcend industries, and equally so in our entertainment and media space as well. Yes, the short answer is yes.
Right. That was all for today, ma'am. Thank you so much for your time. I do have a lot of takeaways from this session. Thank you so much.
Thank you. Thank you for having me. And I apologize for the hiccup in the beginning.
No problem, ma'am. Thank you so much.
Bye.
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 Can I now have Abhinav, my co-host, on the screen, please?
Okay.
Yes, welcome back.
Soumya, thank you so much. Well, because the media and entertainment sector directly did not have any props from the finance minister, there are no SOPs, any relief for the entertainment and media sector directly. Although there is a special focus on the demand surge, which will directly place a lot of money in the hands of people, which just might benefit the media and entertainment sector. That is the general eulogy going around in the industry. So Soumya Sehgal, thank you so much for hosting this session. So this is it from the Plan B show for today. Insightful sessions, a lot of good speakers, a lot of things being written and overwritten. The finance minister presented a very bold budget. The demand is expected to go up. The stock market has responded. The Nifty banking index is at an all-time high. Infrastructure spendings, the big announcement made by the finance minister, has given the required impetus to the market. And we hope that in the coming time, whatever announcements have been made in the budget actually land on the ground rather than just being on the paper. So this is goodbye from the from Team Business World. Adieu, Plan B show. We'll see you soon on BWTV. Bye-bye. Thank you. Good evening.